Good morning. Good morning. It is a good morning. It's delicious, actually. Wasn't expecting that one, was you? Man, these glasses are amazing. I'm seeing so many more salty comments. This is great. This is awesome. I need these antagonistic individuals for my story arc. Like I need that. Okay, it can't all be people supporting me, right? Where's the fun in that? Just give me a second here. I gotta make sure I get my laptop plugged in here so we don't run out of power. I'm only going to be with you until around 9-ish, something like that today. Um, but I'll observe the non-farm payroll with you today. Just give me a second. I'll be on mute for a minute. Alrighty. Welcome back. Welcome back. It is your host, the ghost with the most. That's right. Good old ICT. Hope you're doing well. It is non-farm payroll Friday. Just about 8 minutes or so away from the carnival ride that most retail traders want to be a participant in. They want to ride the roller coaster. So I shared what I've been doing here. I was running something I outlined would unfold this week. If you go back and look at the reviews, the commentary, the things I was posting on my son's channel, and for the folks that don't know where my son's channel is on YouTube, I'm sharing every video link on my community tab on my YouTube channel. If you're following me on the app on your phone on YouTube, I know that on my older phone, I couldn't get the community tab section up on the cell phone, but you'd have to go to like a laptop or something that's a little bit bigger. I'm not sure why it does that, but the community tab is kind of like where I post things to. I don't use Twitter anymore. I don't use Facebook. I don't use Instagram. I'm not on any of those services, but I use my community post or tab on my YouTube channel as a way of kind of like a message board, telling you what I'm getting ready to do, or just give you some kind of encouragement, or just needle the folks that need a little heat from ICT. So I realized while watching the uh, the playback for the editing, I didn't have the end dog on for today. So I'm gonna do that real quick before we get into the tomfoolery that is non-farm payroll. So on a 1 minute chart there, and That's the 6 o'clock open right there. So that's going to be the low of the new day opening gap. And the close is that price there. So the high is the close at 459. And new day opening gap high. And then we'll get this small. And then all you gotta do is just change that to low. Quick, painless. Bada bing, bada boom. All right, and then scrub on over here. She's a bit up there. And it's the, look how it's overlapping with the August 13th daily fair value gap high. That's interesting. I don't know about that. Let's see what we get here. So when you're looking at non-farm payroll, okay, I'm not enticing you to try to trade this, okay? What I like to use it for is I want to see what type of liquidity they aim for, okay? Before we get into it, non-farm payroll is not algorithmic, okay? That is not algorithmic. It is the same logic that is used in the automated form, but non-farm payroll like FOMC is a manual intervention. That means they literally pick where they want it to go abruptly, just like that, okay? And you're encouraged not to try to trade it going into the non-farm payroll number. 20, 30 minutes after, or if you're really, really skilled, 15 minutes after, so 8:45 a.m. Eastern time, that's the earliest I would say that anyone should try to trade the non-farm payroll. Now, obviously, if you're already part of a trade and you're holding something, then it goes without saying that, you know, if you have taken something off, you can leave a little partial on to see if it gives you a little bit more juice out of that lemon. But you do not want to be trading this, okay? If I were to trade every single non-farm payroll event before the fact, in other words, if I was trying to position ahead of it, I would have terrible stats because I don't know where they're going to run it next. I don't know that. You aren't going to know that. Just like I don't know where they're going to take FOMC. I don't know where they're going to take CPI. I don't know where they're going to take PPI. They're all manual interventions. That means that you should not be trying to position yourself ahead of them. Wait for the initial shock. Once that big crash, you know, comes down into the marketplace where the shock and all hits it, look and see what is left behind. Like, where's the smooth edges? Because that's what they're going to go for next. Okay, so in the times that you're going to be wrong about that, okay, well, that's just one time you're wrong about it. It doesn't mean your career's over. All right, so we got about 2.5 minutes. Let's take a quick look at what we have here. Let's do it on a 15-minute time frame. And what I teach my students to do is, and before I close, I'll review the trade that I just did, my Yujiro Hanma trade. That's my Yujiro profile and model. I'm being facetious. It's just me doing my typical stuff. One shot, one kill. I told you the turtle soup, how it forms. Told you what to look for this week with the commentary on the daily chart. And some of you were surprised, like, how did that happen? Where did you get that information from? All right, so we are inside this SIBI here. And let's define it real quick. Here's your sell side. And some of you are going to be like, oh, well, you know, it's going to hit one of those levels, right? And the important factor is seeing which one they leave going into the 9:30 opening bell. and or do they leave it in place after the initial run for liquidity? And we will do that. Now we've had a nice drop this week, so it's reasonable for it to see a return back into some intermediate term buy side, especially with the non-farm payroll. Okay. So what I teach my students to do is frame out 15-minute highs and lows that are key. Relative equal highs, buy side. This one here, we do have, this, but I don't like that so much because we already hit this lower low. And we've already met the objective I had for this week, which was that August 13th daily fair value gap low. And you can go back and listen to my commentary, look at what I was explaining on Caleb's channel and the things I was mentioning during the live streams on this channel. We were looking for lower prices, and I wanted to see it get down into that 18,765.25 level. For the folks that said, you got two screens recording, just turn the trade on and go. You do it. You get in at the high. You get in at the high and you hold for the low. Do it on an execution. I don't care if it's a demo. Do it. Bet you can. Salty boys. All right, so here we got it. This is non-farm payroll. You want to trade that? You want to trade that? Woo! That's right, baby. Right to the buy side. I didn't like this one. This one's the one I liked. Now, if you think that you're going to trade these types of moves, if you think that's going to happen, and you're going to be able to get in there and they're just going to let you ride it, and you're going to get out, you're not even going to get out here. It's happening so fast, and your broker is not allowing you the execution. Every broker pulls their engagement because they know that people are going to do what? They're going to over leverage, just like everybody does with these funded accounts. They over leverage, they link 20 accounts, 30 accounts, or whatever the maximum is, and they go for broke. They try to trade as much as they can be allowed to do by the funded account company because they think it's the lottery. And they know they can't trade well, so they're just trying to get lucky on one big move. So when do they know markets move around a lot? Non-farm payroll, FOMC, CPI, PPI, and they gamble. So brokers know that. They know that. So they're going to pull the opportunity away from you. That's not a lack of liquidity for the sake of buying and selling. There's a lot of people want to buy and sell. I promise you, they all want to buy and sell. But your brokers collectively are not allowing them to do that. So that's why you have this illusion, okay, of lack of liquidity. They call it illiquidity, okay, or illiquid markets. Now, there's absolutely liquidity there, but the brokers are not going to allow themselves to see people go in and just run roughshod on them because some brokers B-book. And when they B-book, these same people that they're usually taking the money from, they might get lucky that day on a heavy-handed bet. And they're not opening themselves up. It's just like a casino. The house has the edge. They're not trying to let a card counter come in there and do what a card counter does. So what I like about the non-farm payroll is it gives me a clue sometimes, not all the time, where it may want to trade to at 9:30. Now, how can I use the information that's been presented here? This is kind of like what I'm teaching my students over the years where we're watching non-farm payroll. I'm not telling them what to do. Okay, nobody's trying to position ahead of it. But while we did have relative equal lows here, the fact that we took this low below that one, that already indicated that this one was more likely. That's why I said I don't like this one so much. This one is reasonable. Why? Because we've already traded down to that daily fair value gap low on August 13th. So it's reasonable for it to try to go back and run up against the trailed buy stops, which would be here. This is a 15-minute time frame. It's a bellwether time frame. So having like FOMC, PPI, CPI numbers, any kind of big high impact news driver event. I just realized I didn't check my audio. Crap. Ugh. Man, I'm just going to go with it. I'm trusting that you guys can hear me. I don't have my phone next to me either. Jeez, ICT, you're supposed to be a professional. Hold on one second. I have to make sure before I go in because I don't want to review that trade and then realize I don't have the audit. So give me a minute. Okay, give me a second. Oh, here, Ross Cameron. Wow, the most comprehensive day trading course, according to Investopedia. Thanks, Ross. All right, so let's see. Yep, I hear myself jawboning now. Yep, 4 seconds delay. Very good, very good. All right, so anyway, back to this carnival-like atmosphere. The 15-minute time frame, okay, you really want to warm up to that time frame. That's the reason why I took Caleb's attention to. That's like his high time frame outside of a daily chart, obviously. His high time frame is not an hourly chart. It's not a 4-hour chart. It's just the 15-minute time frame. Then we can drop down to a 5-minute chart. And you can drop down to a 1-minute chart or a sub 1-minute chart. And if we can appreciate the level of interest around stops that are above the marketplace or below the marketplace, the 15-minute does a really good job of highlighting where they're obviously going to be resting. Now, you don't need a book map. You don't need any kind of like, application or app. And I know there's some people out there that have created them and or are building new ones because there's a lot of interest around liquidity now because of the stuff coming out and the way I teach how to attack it. And it's framed in a way that seems mysterious. Okay. And sometimes, admittedly, I probably in the very early stages created this air of mystery around how liquidity is in the marketplace and how you have to seek it. But I've never been ambiguous about where it is. And I teach how to find it and how to look for it. And then based on how that liquidity is engaged, helps you frame out a narrative, helps you determine what the market's likely to do next. Because that's really what we want to do as a trader. We want to know where is the market going next and how can you be best positioned to capitalize on that change in price if it's moving higher or lower, and or avoid being wrong more times than not. So that's kind of like what the essence or pursuit of a trader is in managing the risks along the way. So a 15-minute time frame, Caleb, is your bellwether chart for determining where the obvious, clear pools of liquidity that the algorithm will refer to for that individual daily range. Okay, so what happens if I was going to keep this for the book, but I'll just drop it because I didn't do a live stream yesterday, so I'll give you a little bit extra today. What happens if you can frame a pool of liquidity like we did here? We outlined it real quick. Didn't take long, did it? Didn't take long. 15-minute relative equal highs here and this low here. And I mentioned the stark contrast was that this low was taken slightly lower than that one. And then going into the non-farm payroll, while these two may be viewed by someone else, they may say, well, look at this, this is relative equal lows. Because it's so close to that low here, if I ever see this one or something similar to this, that low being taken like that, it's already done enough to tip its hand saying, okay, at the time of that high impact news driver, FOMC, PPI, CPI, non-farm payroll like today, I'm going to elect to anticipate, let's say it that way, okay, because I don't want you taking what I'm saying and saying, oh, he's giving me that secret nudge, nudge, and wink, wink to take a long trade when it doesn't. No, no, but it does encourage a new startup or a new student when they can see these big flash moves that take place, how you can anticipate where they're likely. They're not. You're not going to be right all the time. Okay, I'm not right all the time when it comes to these big events. Okay, I have to wait because I'm not going to put money up against something that's uncertain. Just as well as I mentioned that I didn't like this one here and this one was more favorable for a run for non-farm payroll, it could just as easily gone down, wipe this one, then one up there. Okay, so that's what I'm about to explain to you. If you can frame on your 15-minute time frame where the obvious pools of liquidity for buy side, which is here above relative equal highs, and the sell side below relative equal lows, if you can identify them both, and you should be able to do that over time by doing it every single day, this is what you should be doing also. Every section of your journal log entry, Caleb, it should have your 15-minute time frame annotating at the beginning of 9:30 where the 15-minute pools of liquidity are, because that's your bellwether on the daily range, because it's going to give you every piece of information that I'm going to help build on before we close this live stream out today when I review the trade I took yesterday that carried over in today. And no, it's not technically the 5th of September because the execution that closes the trade occurred today. So the live execution, it's not a profitable endeavor until the trade is closed, right? So the execution is September 6th, not the title of the video shouldn't be September 5th. So if we can frame the idea of buy side and sell side on a 15-minute time frame, what happens if the market at a high impact or maybe even a medium impact news driver on the economic calendar, like forexfactory.com, Econo Day? I wonder if, I don't know, leave a comment in the post I just made on my community tab. And or if you're a private student, you know how to get a hold of me that way. Does TradingView have a calendar? Like I don't know, but if they don't have one, they should do one. But whatever economic calendar you use, if it's one of the ones I just mentioned here, I interchangeably use two. Econo Day is what I've been using since the 90s, and then you have uh, the Forex Factory one, which I got used and accustomed to using when I was teaching primarily Forex. But you want to look for the medium or high impact news events. I don't care about the yellow or the very low impact news drivers. I don't care so much about the speeches. I do care about Fed chair. I do care about bond auctions. I do care about only the U.S. stuff. Now, if I'm trading Forex, which I don't know, I no longer trade Forex, and I know all of you are upset right now because you're like, you don't talk about Forex anymore. I hate you. You want to break up with me now. The same things I'm teaching here, they work in Forex. The problem is Forex right now is being strangled. Okay, there's so many things going on in the monetary system that there isn't a lot of big placement going on. So you need huge flows coming into those pairs, those currencies to create this disparity. And because the dollar's being basically demolished, everyone's trying to determine what's the best play going forward. And that's the reason why I backpedaled away from it, because we're going to see a big, huge, like a depegging what the euro and the Swiss franc was years ago. If you've never seen what that was, do a search on YouTube for documentaries about it, because brokerage firms, large institutions were completely wiped out instantly that day. So I know that that's coming. I don't know which currency it's going to be. It may be the dollar. It may be another currency. But everyone that's in Forex, when that happens, they're going to get crushed, immediately gone, dusted. And you're going to owe more money than you ever made in your life. Okay, because that's how it is. It's just like you're done. You'll be liquidated. You're a pink mist in the air, gone. So that's why I backpedaled back to commodities and futures trading, This is where I cut my teeth in 1992, November 5th, 1992. That's where I started. So while Forex was fun, Forex is not my thing anymore. Okay, so um, I'm glad that there's been this big shift away from Forex. And now folks that are wanting to be traders, they take their finances a little bit more serious. They're not in there gunslinging, trying to trade with $25 accounts and trying to turn them into $1,000 in a month. I mean, crazy stuff, crazy stuff, trading with fake brokers, basically. Okay, it's really what you're mostly doing with these Forex guys out there. When you're trading futures, you're trading a real market with real buying and selling interests. Okay, and billions of dollars are on the line, where it's a gentleman's market. Okay, and I say that because Forex, you're all going to get a different high, you're all going to get a different opening price, you're all going to get a different close, because you're dealing with brokers that are given the freedom to screw you. In futures, everyone has the same high tick, everyone has the same low tick, and everyone has the same opening price and the same closing price. It's a level playing field. That's why professionals will trade this market over Forex. That's the reason why. When you afford a broker or the clearing firm that you're using to execute your trades on, you are signing the agreement when you open up an account that they can open and close and narrow the spread at any time they want. It's at their discretion when they're going to do it. And then you wonder why your take profit doesn't get hit, or your stop gets hit, but then it runs. It's going to happen more times in Forex than it will happen in futures. Now, it doesn't mean that you can't be taken out and swiped with a stop hunt in futures. But the difference is, the contrast is, you were really wrong if it happens in futures. And that's good. You want to know if you're wrong, okay? But in Forex, you have this wide degree of disparity between all brokerage, and that to me is a little scammy, okay? So if they are going to cannibalize their own clientele, would you choose to trade in that? Would you rather swim in the pond full of crocodiles, or get into a pond that's far enough that affords you the time to get the hell out of there if that one single hippo is at the far end of it and you've been watching the whole time? That's what futures is. There's a hippo in this water, okay? And hippos, they kill more than crocodiles a year. But you got one shot, one chance to screw it up here in futures. In Forex, you have so many things that can go awry and go against you that are outside your control. You may not even see it happening or even understand that it's happening. So that's why I've migrated away from that, because now the climate is geopolitically primed for some major financial meltdown. And it's going to be in the currencies. The currencies are going to get crushed, and it's not going to be something that you can trade. Look at the Swissy and the Euro depegging, okay? And you'll see exactly what I'm talking about. It's 1 second it's there, and then it's immediate, the game over. Like it's game over instantaneously. Boom, it's gone. You don't have anything left. And literally brokerage firms, large institutions, were completely crushed. So I'm answering this because I'm still getting questions why I'm not talking about Forex. Because if I talk about Forex, I know that my influence is going to have people doing what? I want to trade Forex. I want to do what ICT is doing. I want to do this. I want to do that. I'm not in Forex. I don't have a penny in Forex. Zero, zilch, nada. No broker holds any money in Forex for me. None. Not one. In futures, you have reputable brokers. You have the same price. Everybody sees the same thing. It's a level playing field, and it's a professional gentleman's market. That means, yes, there's manipulation, but it's not like a wild, wild west like Forex is. Okay, and it's not likely to have the same thing happen to it, even if there is something in the currency market. There will be shockwaves in futures as a result of that, but I would be better equipped mentally and psychologically to weather any adversities while trading futures versus Forex. So there's your answer for everybody that's been asking. Why you keep talking about stuff and nobody asks you? You don't know who's asking me anything, bro. So we're back up into the day opening gap. Isn't that beautiful? So we traded all the way back up to the buy side, which was favored over this because of that little tiny little tick below that. But what happens if it runs both sides ahead of 9:30. Like say for instance, it opened here at 8:30, it traded down, hit the sell side first, and then ran up, hit the buy side. If it would do that and then keep the range, whatever this, say that high right here, say stays intact, and then we march to 9:30, and it doesn't make a higher high, and it doesn't go below here. If it did both sides of, I'm sorry, I said that wrong. If it would have taken sell side first and then went up here and took the buy side, and that range that was defined by that stays intact all the way till 9:30. What that indicates is we have a 50-50 chance that the market's going to stay inside that range and not go down and take the low out again. But what happens if it does this? It fails to take out that sell side, takes out the buy side, and then doesn't rip and keep going and crushing speed going higher. Like if it just hangs around and creates a little bit like retracement back into the first fair value gap on Thursday, because that's what this blue line is here. I had to throw that little lipstick annotation on because I didn't want to create anything over here because the text wouldn't show up. So I had to type it in like that. So I had to make sure the recorded trade had everything on the chart. So I usually don't like to annotate it that way. But if it stays the way it is right here, and we didn't take out the sell side, it means that we could flirt with trying to make an attempt to go back down here, but I would expect it to fail. And then everybody would want to chase it going lower. And then they would do something that's like this after 9:30, going into 10 o'clock, 11:30, and then closing somewhere in the middle of the high end of the daily fair value gap on August 13th. So it gives you at least something to work with initially to frame some kind of a narrative. And I know what I just explained to you for the very, very brand new students that are coming to me. It's a little advanced, but it's okay because you're seeing me outline things day after day. And when I'm talking about the higher time frame charts, where the price should reach to, what should it gravitate to, over time being exposed to that, a lot of the questions that you have right now that you think are paramount, that you can't sleep unless you figure the answers out right now, I promise you, if you just write those questions down in your study journal, just relax. The days that you have those questions come up, write them down and leave space for the answer, because eventually when you get to another video that you watch by me or a live stream, I'll cover something. But obviously, there's so many of you that are watching. I know most of what you're going to ask me anyway, and most of those things are already answered in the old content that's on my YouTube channel. All the old lectures, they're not stale. They don't stop working because they're years old. All the stuff that I taught in 1996 they're still happening right now. And you're talking about the algo changing. Come on now. So 15-minute time frame, Caleb, is what you want to focus on. Early on, I expect Caleb to have the wrong buy side and sell side annotated. It's normal for that to happen. I want him to mess it up so that way I can show him what he's doing wrong and where the right one is. That way, if you're doing similar things, you will have that experience of, oh yeah, I probably was thinking the same thing, if you're even doing it at all. That's why it's important before you watch anything that appears on Caleb's channel, you do it first in your own charts, okay? Because that way it's like the same experience. By me showing you mine, I'll show you what my charts look like at the end of the day. This is my annotations. This is how you should have your charts marked up. These are the observations that you should have, in my opinion, based on what I believe you as the audience member, specifically Caleb, my son, you should be focusing on right now. It does not mean it encapsulates every possible thing that I've ever taught on. It just means that as a beginning basis point, like if you're brand new and you want to know how to start, this is how you start. The 2024 mentorship, and then watch what I'm doing over my son's channel. For the next couple of weeks, it'll be primarily me talking. And then because he's seen enough examples of it, he can ask me pertinent questions that are useful. Otherwise, right now, if I sit with him and he says, all right, Dad, what about this and what about that? They're infantile questions, and they're best suited to be answered just by going through the process of me watching, the next couple of weeks, reviewing, doing the screenshots for his journal. And then he's going to try to, in his best effort, try to replicate that on his own. and it probably won't be as clean and crisp and all, and it's going to get on my nerves because I'm OCD. But you are looking at those charts. What they are documenting are important to you. I'm watching this over here. So I'm looking at this little section of price action. See how we went down, up, and then now down. So there's this inefficiency right here. This is the only thing that I'm watching. If it really starts to make a move above that, then we'll probably be working towards a deeper retracement post 930. But right now, it traded right back up into that little area here. I don't think that is a reason to stop price going higher, but that's just something I'm watching as I was talking to you. So 15-minute time frame, there's your liquidity pools, and then you strip it down from the 15-minute time frame down into a 5-minute. And levels that would be defined on this time frame, they're considered minor buy side and sell side. Okay, so you have primary buy side and sell side on a 15-minute time frame, and that's going to give you your first parameters for framing out or fleshing out a narrative for the session and or the daily range. So one of the things I like watching in other live streamers and other YouTube channels that are very upfront, and they tell you what they believe, what they think, their opinions, and some of them are actually executing on them. I'm thankful that they're willing to do that because they create pools of liquidity in sentiment, and it allows them when they get on their YouTube channel. And this is not a knock against any individual YouTuber. I'm focusing on their audience because that's what I'm watching. All they're doing is creating another watering hole. So when I'm watching other YouTubers, it's a watering hole. Animals are going to go out to that watering hole and they're going to try to get a drink. And they're either chasing what this person's doing in the YouTube stream, which I don't ever, there's nobody out there I want to follow. Not one, okay? But I like watching my students, but I like watching specifically a number of YouTubers that have a decent following, and their animation around a particular bias for the day. If they think a certain level is going to be hit, and for instance, let's roll back in time. Let's just say right before 8:30, say it wasn't non-farm payroll, and we weren't going to have this fast run in price. The way I just framed out the sell side and the buy side, real time in front of you, I would have those same levels annotated the same way. It just means that it's likely to take a little bit longer to get to them because it's not a non-farm payroll, FOMC, CPI, or PPI type event, driving price right to it. So because that resource that we have in YouTube, it allows the folks to have a chat window and whatever, by watching the sentiment shifting, and if I see another YouTube channel that I watch and I think that they have a very busy channel with chat, I love that. And I'm not engaging in their chat, but sometimes I'll throw a bone out there to try to get some kind of, like if it's real dry and nobody's really chatting up anything that gives me kind of sentiment reading, I'll make myself known in the chat. And then all of a sudden, Billy Big Ass, balls or whatever you want to call it, guy wants to show everybody he's smart. He'll say something. And then that's what I'm looking for. I want the Joker to raise his head up, because as soon as he does that, somebody else is either going to say, no, I don't think that's going to happen. And then a wave of other people saying, yeah, you're right, that's not right. Or they'll support him. That's me manipulating that chat room. Okay, I'm creating some fluctuation because I have to create a disturbance. I'm acting like a Judas. So I want their opinion. If I see predominantly most of the people that I'm watching, sentiment-wise, if they're saying they think it's going to go down, and I'm already seeing things like this low went lower than that one, and this one is relatively equal. See, there's this high here didn't go above that high, even though these could be framed, if you're looking at it that way, that would be a relative equal high. But this is high probability. Why? Because this high is lower than that one. Go back to what I was teaching you in the 2024 content so far. So this high over here is lower than that one. But you don't have that here, do you? You have this lower, and then you got this one over here, where it's just like, it's already disturbed it. It's disturbed that liquidity. Where here, it's a little bit more blocky looking, where this is a wick. If this wick gets overtaken, like it does here, that means it took a real run on liquidity versus like how I treat a wick. I'll break that down into quadrants and more specifically the halfway point. If I see a wick like this and we're above it, I want to see it trade down into the upper half of it, but not even go below the midpoint of it. But in this leg lower, it passed through that easily and spent time down there. What was it doing? It was accumulating. So you don't have those signatures up here. It's more blocky. So that makes this a better candidate for a high impact or a medium impact news driver, drawing to that. But if it's not a if it's not a high impact news event like the PPI number that comes out, the CPI number, if a FOMC rate announcement comes out in the afternoon, 2:30 in the conference call, and then you have like a non-farm payroll event here, excluding them, everything else, if it's on economic calendar with a medium impact, I would expect that same type of thing unfolding here. It just would be a gradual trading up to that level for the buy side. Does that make sense? I know you can't answer me, but it's affording me the moment where I framed where the liquidity is, and then I'm actually getting a dynamic sentiment reading by people that have a vested interest in looking right on social media. Think about that. If they're going into these chat rooms and they're trying to voice their opinion, it doesn't matter if they're right or wrong. Okay, that's not my point. The point is they're willing to toss it out there in the ether. And I want to see how much traction it gains by anyone else in that chat room. That's how I'm using other YouTubers' streams. And if they start cheerleading the idea, oh, yeah, I like that idea, but my target's a little bit past that. That's exactly what I want to hear. I want to hear that stuff like this. Yeah, I want to see it go below that low here. I want to aim for 18,680. And then somebody else will come behind and say, no, I'm looking for 660, bro. That's exactly what I'm looking for, because now I'm arm wrestling them as smart money against dumb money, street money. Okay. I'm not saying everybody else's live stream is dumb money. I'm just the ones that are acting that way when I'm expecting this low not to be taken and this area here to be drawn to. What you have at that very moment is the purest form of sentiment at a very specific time where it's diametrically opposed to what the algorithm's going to do. Who do you think is going to win that? Who do you think is going to win that, right? Come on now, you know the answer. Dumb money is going to fall on the sword of smart money, okay? And when we can see these tug of wars, these wars, if you will, between someone that's not informed, that are just impulsively trying to share an opinion for the purpose of looking right. Smart money is not trying to be right. Smart money is out there decapitating other large entities. That's what they're doing. That's what they do. The algorithm just delivers price. Smart money engages with that algorithm with their own high frequency trading algorithms or discretionary trading, but they use the logic that I'm showing you here. So banks do not trade with what I'm showing you here. There's an entity outside of that, okay? It's outside of that. They're not Goldman Sachs, because Goldman Sachs tells you you can't trade in time to market. Well, they're really stuck with what I just did today. 2, I'm doing it every single day, proving where the market's going to go next. And does it look like noise to you? Does it feel like you're confused as to, oh, it's too much noise going on in these time frames? No, it's clarity, right? And it's encouraging. It encourages you to be able to say, hey, if this guy can do it, and he used to deliver pizza, come on, man, I can do this if I apply myself. You just got to give yourself some more time and effort. So if the 15-minute time frame buy side and sell side liquidity pools are defined, it gives you an initial context. And I will counsel you, and the live streamers will appreciate you by watching their streams too, because they'll get more views. But every big name YouTuber that follows the futures market, my advice is quietly, respectfully, in anonymity, start watching their chat windows. Because I'm using that as the best sentiment indicator, because I know what I'm looking for technically. I'm looking for something to take place, to draw to a specific price level, to behave a certain way. And I have made that known to you. since we started doing this mentorship. I told you every step of the way what I'm looking for. I'm using higher time frame charts to tell you what I think narrative wise, but intraday I can trade both sides. It's not a problem to do that. But if we're looking for that low on August 13th on the fair value gap, which I'll take you up to the chart in a second, that was where I wanted to see it trade down to this week. Once it hits that, I'm done. I'm not personally looking for anything lower. Can it go lower? Absolutely can, but I'm not going to be on that. Why? Because I'm sailing into the weekend. I'm done. I'm letting everybody else out here fight on non-farm payroll Friday to find something to make money on. When I just destroyed it, Godzilla's the atomic breath, boom, gone, nuclear waste now. And everybody else is trying to find scraps to eat. I'm out the door. I'm outie. I've already done enough damage. I don't need to do anything else. So I'm walking back out to the ocean to find myself in my Godzilla lair, right? So if, I know it's always some kind of movie analogy. That's how my brain works, man. So when we drop down from a 15-minute time frame to a 5-minute chart, then you start seeing smaller pools of liquidity. And what would that look like? Well, inside of this low and this high, that's your range. So if we think by dividing up the characteristics that the buy side liquidity pool has in contrast to what the sell side, the fact that this wick was overtaken, that to me is more indicative of this was a real stop hunt versus this blockiness. Okay, it's just real smooth compared to this. Would you agree? This is a little bit more jagged, more piercing versus all of this blockiness. So this is more likely to be drawn to on the basis of just the way the price printed it. Then you add to it, what day of the week is it? It's Friday. What direction primarily has this week been doing? Has it been going up all week? Or has it been going down all week? Clearly, it's been going down all week. We had a big old Tuesday drop down. Okay, the first part of the morning. I wasn't part of that, but I smashed it in the afternoon. And then you then you watch what I did yesterday into today. So I don't need to be in there every day. I know how to catch up. I know how to fill in the gaps of days where I wasn't participating in because I will let the market tell me what it wants to do. I want the setups to come to me, as I'll indicate when we break down that trade. But you have to look at price and discern when you're going to engage, when you're not going to engage. And once you have that 15-minute time frame defined, this is your dealing range. This is your high, and this is your low. What is the daily range, and or specifically, what's the morning session going to do with that range? Is it going to stay inside of it, or is it going to trade just outside the low of it, or is it going to trade just outside the high of it? Is it going to run both sides first? And if it's going to run both sides, which side does it run first? In this case, it ran to the buy side. But it stacks the odds against this being a prolonged move lower for me personally because it's Friday. It's fulfilled my high time frame daily objective by going into that August 13th daily low fair value gap low. And that sounds like a whole lot of mumbo jumbo, but when we go back to the daily chart, you're going to see exactly what I'm talking about. And it's going to make perfect sense. But this isn't going to be a long video, so it's going to be easy for you to watch a few times to get the notes from it. After the 15-minute time frame is defined, where you have both buy side and sell side, dropping down to a 5-minute chart, then you can start looking at things like this, where this is a high, slightly lower high. So these are relatively equal. You might not see it that way. That's what I'm teaching my son to view it as. So buy side is defined with this high here. What kind of high would that be? What kind of buy side specifically would that be? A minor buy side liquidity pool. So you'd annotate it like this. I already have presets, and I know it drives you nuts. You save so much time. I'm teaching. I'm not trying to save time. I'm teaching. You want your brain surgeon to go through the cliff notes and then you want to be doing brain surgery on you? No thanks, Brody. I'm not doing that. I want the person that went through all of it the right way. So this way it helps teach how people are to annotate because there's always new students coming in. Top, left, and I like 14 or 16 depending on what the chart looks like. That's good for them. So this is a minor buy side liquidity pool. Okay, and then we have again right in here. See these? So that same thing. So you can highlight, not the edge of it, highlight the line, hold down control, drag your mouse away from it, and it'll copy it. And then you just put it on the higher of the two highs and extend that over. Okay, so you have a primary sell side liquidity pool, a primary buy side liquidity pool. What makes it primary? It's a 15-minute time frame dealing range. So that way it tells you what you are going to frame your session and or daily range around initially, because you have to have a starting point, right? Where do I start ICT? Where do I start looking? This is what you start with, okay? But that 5-minute chart will break down that range from this high down to that low into smaller buy side and sell side liquidity pools. So what are we seeing here inside this range? Primarily it's buy side. Okay, we have a lower run here below a wick, so that means this is a little bit more jagged. It's Friday. It's been going down all week. So which side is non-farm payroll most likely? Not all the time. Not a panacea. Not a be-all, end-all. It's always going to work this way because ICT said so. This is my protocol. This is what I teach my students to look at price like this, to anticipate where the market is likely to go. I do the same thing with PPI and CPI. And I sometimes, and I'm talking about maybe 2% of the time, get it right. But 98% of the time, I'm wrong on CPI and PPI numbers initial delivery like this. So I'm trying to remind you, don't think that you're going to walk out there like John Wayne and be like, it's over. You know, the Duke's here and I own all this stuff now. This is my show. There's a new sheriff in town. You ain't going to be able to pull that off. Okay, it's not going to happen, because if it could be done, I'd be doing it. And I'm not able to do it because no one knows what they're going to do with that information. That information may be technically viewed historically as a positive, but they sink it aggressively lower. And then they'll make the excuse later on, well, you know, they priced in, you should have known better. They didn't have any articles saying that they were expecting that, but there's always some excuse in the news feeds that it was priced in. Traders priced in this and come on. If it ain't something you're going to tell me in advance, don't talk about it. Don't talk about it, okay? So I don't care about what the raw data is. I don't care what the job number is. I don't care how many jobs are lost or created. I don't care about that stuff, okay? Because they're all lies anyway. Everything about those data points, every single one of them are all fake. They're all meant to stimulate the pockets of investors and large institutions. That's what they're there for, okay? So it's like an illusion. It's a reason for you to have some other excuse to get in here and risk more of your money. That's what it is. So because I think about it like that, I don't go in with trying to decipher the fundamental aspects of it, because fundamentals have left the chat a long, long time ago. A long time ago. As soon as we left the 90s, fundamental analysis is now a joke because there's so much lies built into it. You can't trust it. So it goes right back to where I started as a technical trader. The chart's going to tell you everything. Everything. So if we start looking at that range and we see there's a buy side here, there's a buy side here in a 5-minute chart, we can see how these are treated in the realm of how far we're going to reach back to that buy side, because we already determined that that's more likely, and you heard me say that before the non-farm payroll number releases. How we traded that first minor buy side, that's going to give you a clue, okay? It trades up to it here, and then watch what it does. Jams down. What's that doing? Taking out that short-term low, but it is not going below that low here. So as soon as this candle closes there, this one here is the next one that is considered. It trades above it, right back down in, and then rips through the buy side. You cannot trade this on non-farm payroll release. You can't. You're not going to get filled, or you're going to get slipped so bad. What is slippage? Slippage is you trying to buy it at, say, 18,845, and you get filled at 18,862 or higher. But you want to have a stop loss somewhere down here. You now just were filled at a very unfavorable place, and now your risk is incurred in a much larger capacity than you initially wanted to take on. If you even get a fill, you may not even get filled. I have tried very, very hard to try to be a cowboy in this individual day. And you would get requoted, requote. You're buying. You're trying to buy it at the market. Buy. Requote. They're just keeping you from getting in. That's all that is, okay? There's a lot of people out there that want to buy, but the brokers are stifling that. That's why as soon as I see somebody out there, they have 50 contracts of gold or US 500 or US 100, okay? And they're showing they got 50 contracts or 50 lots, 50 lots, 50, and they show little MT4 screenshots and they're putting it up on the screen. And there's a whole wall of that. And it's always after the fact. And they're all up like 12,000, 15,000, each one of them. They did not get filled on that. It did not happen. Okay. I promise you that did not happen. But they trick themselves by doing that because it gives them a dopamine hit and it tells them subconsciously. Think about what you're going. You've probably done this stuff. Showing social media what you did right, gambling without real money behind it and no logic behind it. You want the feeling of someone looking up to you. So what are you doing subconsciously? You're saying you're a scammer, you're a fraud, but I feel good about doing it because the social media response that's given to me because I lay them breadcrumbs out there. What are they going to do? They're going to fluff you up, and that's going to keep you from doing what? The work of actually learning how to do this. It's far more easier for other people to entertain themselves because they know deep down inside they're not really trying to learn how to do this. They're not here to learn. Not all of you listening are here to learn. You hear something, you want to hear something so you can go into social media and talk about it and troll and be funny. But you're still going to work next Monday. You're going there, okay? Maybe you're working throughout the weekend with your second job. You got to do what you got to do. But I'm trying to teach you how to avoid having to do that, even if you don't like me. You don't have to like me. But to sit down and take notes because the things that I'm teaching are going to help you formulate an idea of how to attack price action and how to avoid certain instances where everybody else is going to rush. They want to rush in here and capture these types of moves. I don't need that. Look what I just did. I don't need this day. I don't need to do that. I don't need a day trade. I can swing trade. I can position trade and get an extreme level high, an extreme level low, and be content with that. And that could have been my entire trade for the entire week and never done anything else. And that's how I was trading when I was trading Forex. I would look for those types of setups. I wasn't in there trying to do every little 15-minute movement. I don't care about that. You can do that. If that's what you want to do, you can do that. But that's not my cup of tea. I don't like that. I want to be in there where I know I have the largest magnitude of the move on side that I'm trading on. And it's very forgiving because that means if I'm using precision elements to get me into a trade and I'm trading at the highest level where this move can start trading lower from, and I'm going to show you how I did that, okay? It allows me to sleep. It allows me to eat. When I was younger, I couldn't even eat when I was in a trade. My stomach would be in a knot. Like I was in constant anxiety, constant stress. Heart rate crazy high, like blood pressure, I'm sure was off the chart. But I wasn't looking at those biometrics back then. I was just wanting just to survive the trade, let alone make money. I just want to survive. Can I just be in this trade a little bit longer than the last one? That's how it was when I was 20 years old. And you probably have that same feeling right now. But what changes over time is you start figuring out what is the better setups. And you're going to see that these better setups, they're not an everyday setup. They're not an everyday circumstance. There's one or two, maybe 3 a week. And I'm talking very few times where a one shot, one kill scenario where you get in, that's what the OSOK is on my title of the video I just posted. One shot, one kill. That's a sniper euphemism. It means they don't have a whole bag of bullets when they're out in the field. They have a very low amount of ammunition on them because they have to crawl around a lot. They got to carry everything with them. And they're out there to take very surgical strikes. And my mindset as a trader is I don't want to go out there with a machine gun and just start spraying everything and say, okay, what fell? What did I get? Let's go see who I hit. That's not how you want to trade. But everybody does that. Everybody that starts out does that. The first time you go on tilt, that's exactly what you're doing. You put down your rifle and you say, you know what? I need my AK for this. And that's it. You just emptied your magazine and you may not have hit anything, but you wasted everything that's in your magazine. You have no more ammunition. It's gone. And now you're defenseless. And then the market rolls over top of you. Well, a sniper's mentality is he or she goes out into the field and that's the week of the trading. And you're looking for these very specific conditions where the mark that is your setup in price action, the thing that you're going to trade on, the things that make a buy or sell for you, that's your premium rate. That's your little fair value gap. That's your little scope. You don't care what's going on. You don't care about everybody else walking around. You're there to take out that one individual target. And that target is when price steps into that fair value gap. As soon as that price hits the consequent encroachment or starts to approach it, it's in your crosshairs and you're bullish. That means you're going to do what? You're going to take a deep breath, exhale. Then you stop. You don't inhale. You leave your lungs empty. Why do snipers and why do shooters do that? Because you're not moving around. And a small little movement in your scope is a whole lot of movement downrange. So you're exhaling, you're relaxing, you're not talking while you're entering the trade. Exhale, deep. Pause. When price enters that fair value gap, you fire. Your stop gets placed below the imbalance candle if it's a bullish fair value gap, or above the high of the imbalance candle if it's a bearish fair value gap. Then you relax. You don't do anything. You don't want to do anything extra. Just sit there. You don't go on social media and say, I just bought. A sniper does not announce where they're at. They take one shot and they sit still because they don't want the enemy to get a vector on where they're at. And you want me to go out here and trade. Oh, trade in front of me. Do your $100,000 trade in front of me. And do what? Let them come for me? Because that's exactly what I do. Everybody would be doing the same thing I'm doing. Now everybody wants to do it. Please let me copy your trades. My question is this. If I was to do this, okay, CEOs of all the funded account companies, listen, this is for you, okay? Every single one of you funded account company CEOs, Michael Patak, I don't know the other guys. What if I created a lottery system where I took 10 individuals that in an anonymous setting, because you're not going to see me ever go into a funded account company. You'll never get my socials. You'll never get my stuff like that. It's never going to happen. I would never allow that to happen. But what happens if I created a secret lottery where 10 people get to trade copy a demo account that I'm running, and they're copying 20 accounts? How much time do you think that your firm would be able to weather that? Because if I can show that I can do this just once a week, that's $2 million per. That's $20 million a week drained. What happens if I did that with 50 lucky contestants, free of charge, not charging anything? What do you think would happen to the funded account prop firm company? What do you think about that model? Think it would hold up to something like that? You really want me to do that? You want to watch me burn it all down? Is that what you really want me to do? Come on now. You have no idea who I am. You have no idea what I'm capable of. Like, you talk smack all the time, you CEOs on Twitter. Oh, but this guy can burn your whole shit down. You don't even know where I'm coming from. You have no idea who I could bring out there. And if you don't pay them, you're getting shut down. Nobody's going to do business with you. So stop trolling me. You put a spotlight on you, I will burn you like the sun. Stop it. It's not going to get you anything but trouble. Everybody's like sending me an email right now. Please let me be the one. What do I got to do to win the It's a Wonka golden ticket. He's going to train. He's going to let people train. I would never do that. I'm saying facetiously. Think about it. Like, think about that. I got people in my chat window all the time, or not chat window, but chat section or comment section, saying you can't trade this way, you can't do this, you can't do that. I literally gave you the game plan this week. I gave you the game plan. And I went past my time, didn't I? That's because I'm making up for yesterday's not having a live stream. And I got new glasses and it's awesome. I can see it. So we're at the top of that inefficiency I mentioned over here earlier. Right here. And then we have these relative equal highs here. So that would be, we'll borrow this one and just change it. The name and logo. Yeah, can you imagine? 20 contracts with XYZ funded account company, all linked together. That's $2 million. And you're telling me let me ask you a question, okay? And I want to make sure I understand this correctly, okay? However I was to drive it, whether I was using a proxy, someone else, they're trading it, but they're copying me technically. What you're saying to me, if I understand this correctly, is I could theoretically have 20 accounts linked to one account, and all I got to do is what I do every single week anyway, and it's not causing me any kind of extra work. But the person that has the 20 accounts linked together, and I'm doing trades with $100,000, or I'm clearing $25,000 to $30,000 per trade. That's just one session. That's not me trading the London session, the morning session in New York. That's not me trading London close. That's not me trading the London lunch. That's not me trading the afternoon lunch in New York. That's not me trading the afternoon session and PM session. That's not me just trading the last trading hour. That's not me trading Asia just to throw a little bit more spice in it. You're telling me that I could literally go out there and drain these prop firms for $8 to $10 million every 10 days? Every 10 days? And you think they're going to keep paying that out? Man, I'm enticed. I'm genuinely, if I understand that correct, if that's what you're telling me, if that's what you're telling me that I could do theoretically, because I got the numbers, I can pull it. I can do that. But you're telling me that I could theoretically allow someone else to copy an account that I'm driving. You won't know it's me, but this person, whoever that might be, could be a cousin, could be a high school friend of mine, could be any one of you listening. They could be in a position where they are able to say, I want my money now. In 10 days, I can make someone a multimillionaire. Is that what you're telling me? Leave a comment in the section if I have that figured out the correct way. If that's what you're telling me, I absolutely am inviting any CEO of a prop firm to email me at innercircletrader@gmail.com, because I want you to confirm what I just said. If that's what my understanding is, if it's correct, oh, it's coming. Oh, it's coming. It is coming. I don't have to do it long. In 1 month, I can make a multi-millionaire, and that tax treatment is way better than trading with live funds. It's not the same. It is not the same. So, oh, okay. Okay, ICT has entered the chat with prop firm stuff. I'm not going to sign up. I'm not personally going to do that. I'm not going to give you my social. I'm not going to give you all those things like that. No, but I can create a proxy. How are you gonna know who I'm putting in there? You won't. You'll know by the numbers. And I don't want anything for it. I don't want nothing for it. I just want to sit back and watch it. I want to watch it. I would love it. I'll go back to Twitter after that. Oh man, you're gonna burn. Troll me, motherfucker. Oh, it's good. It's so delicious. Oh man, can you tell I missed you yesterday? Can you tell? Yeah, I know you can. But anyway, prop firms are like, all right, look, we got to start looking for anybody that's trading 15 contracts, start with 6. If they start with 6 contracts and they go in 4, ban them. We got to keep everything's got to just keep them from getting their payout. Disrupt their connection. ICT, you broke everything. You're a jerk. That's all. You would all say that. One of them's calling me right now. Come on, right now, you're killing my business. Don't call me when I'm live streaming. So, anyway, we're a couple minutes away from the opening. Let's watch the first couple minutes of the opening bell, and then I'll review the trade I did, and then we'll close it and go into the weekend. Please, ICT, let me be the one. All right, so what we have, and again, this is what I was saying to you many times before, and it's repetitive, I know, but I don't personally like to have these things on my chart because this is the busiest my charts have ever looked. And it's because I have to show you as students what I have written down on my notepad. For instance, when I was mentioning this over here, real time looking at it, I'm going to my pad. This is my notepad. Just a simple little yellow notepad. You can buy them from, where did I get mine from? Costco. And you get like 12 of them in a bundle. And they're about, I don't know, 5 by 9, something like that. And I simply just write down key levels. And what I do is I look at the previous day's high and the previous day's low, and then I layer every level that's pertinent to that range and just below it or just above it. And I have it in raw numerical format, just like that. But as soon as I mention this here, I'm scribbling in my observations on that level, what time frame I noticed it on. Okay. And then what I'm constantly doing is I'm looking at price over here. I'm watching this over here, this raw number, more than I'm watching the chart over here. The chart is the language that you're learning from me talking about what price should do. I'm not going to be able to bridge the gap by teaching you how to trade price without a chart. I can't do that. I don't know how to do that. I don't know how to articulate that in a way where it's going to be understandable. But that's essentially what I'm doing. When I'm looking at price action, I'm showing you things that form in price around the same time, around the same price that these other things occur algorithmically. So when they agree, you should arrive at that assumption about what price should do or how it should behave or how you should observe it at that moment or any given time frame. Okay, so that's the exchange of information and the language that I use by doing so. I'm more concerned about what price is doing at what time, and every time it's fluctuating up and down in relationship to these raw numbers on this same price axis. I don't need any of this stuff over here. This just affords me a way to communicate and talk to you. That way you can see things that may or may not repeat. So because it's Friday, I'd like to see it run up in here and take that buy side. It doesn't need to do it right out the gate, but that's something that is reasonable. And then you have this inefficiency down here where the consequent encroachment of that August 13th daily fair value gap, which we're going to look at in just 2 or 3 more minutes. Man, I bet your social media is buzzing right now. ICT is going to let other people copy his account. And then they're going to sell that. They're going to have a business for 2-3 weeks. Okay, I'm selling seats. Okay, it's $3,000, $5,000, it's $10,000 if you want to copy ICT. You can't tell anybody. It'll be in my email box immediately. Here, are you looking? I'm looking to narc this guy. Okay, he's doing this, he's doing that, right? Oh man. I'm not using your cup today. It was a rush to get out there and grab a bottle of water. So sorry, Daniel. I've used it by the poolside the other day though. He sent me a Yeti mug in the mail because he hears me bitch about how this crackling bottle of water always makes a sound in my recordings. All right, so anyway, we went through the business of picking out why that buy side is here, and we've opened up, and let's look at the opening range. All right, so we have a little bit of an opening range gap still here. Let's borrow that line. That works out pretty good, doesn't it? That's convenient. Let's put it right on the close. So we're showing the previous close, and that's not actually right. Let's go into a 1-minute chart. Sorry. The anchor on your 1-minute chart and your opening price on your first print at 9:30. So you have a little bit of portion of it opened up here. So it tried to get up in there, wait for the open, but left this little portion open here. Watch this low, and we're back inside of, I think it's September 4th. First fair value gap. Or was that 3rd? I can't remember now. I took the annotation off. electronic trading hours. All right, so we're inside this little tiny inefficiency here. And previous settlements up here. These live streams are so much fun. Should have been doing it sooner, ICT. No, I would never got anything done. All right, so I can take this one off. We don't need that anymore. We don't need this anymore. We don't need that buy side anymore. We don't need the miners anymore here. Actually, we do. I didn't drop down to it when I was talking about the miner. 5-minute buy side liquidity pool and sell side liquidity pools. You can see how when we drop down to the 1-minute time frame, which is, I like using the 1 minute because it's very, very detail oriented. Okay, think about like remember when Bob Ross, the Afro white guy that would do his oil painting and whatnot, he would talk to you real mellow, put you to sleep, be like you're ate an edible and you're just chilling out watching this guy paint. Well, you're looking at this this time frame. Your daily chart is like a paint roller. Okay, it's applying a lot of paint, a lot of price action. Your 15-minute time frame is like your 2.5 inch or 2 inch paintbrush. It's not as wide as a paint roller, but it's not a fine tipped brush. Then you have an inch brush on your 5-minute chart, and then you have that really small detail oriented paintbrush for the 1 minute. Really fine, little etching here, little line work here in your painting. That's what a 1-minute chart does. It affords you to get down to the nooks and crannies of the fine details of price delivery. So if I'm looking at that same level here that was arrived at on the 5-minute chart with these relative equal highs, when price ran through that, let's look at it in contrast on the 5-minute chart real quick. Here it goes, it rips through it one single time on that one candle right there. You see that? Let me widen it up a little bit. So you don't really have a chance to see much in this one single candlestick unless you're watching the fluctuations of price over here, which is what I'm primarily doing when I'm watching price. Here, let me say it this way. Don't try to do this part, what I'm trying to describe to you, what I'm doing. That is me having more insight than you have, and I'm not going to teach all that. You are properly learning how to do this by watching what price is doing, because there are times, as I indicated many times before, where prices is using my PD arrays, and if you have a bias that's bullish or bearish, you're going to have the next best thing to what I see that I can't teach you. And there's no other way for me to say it than just that, okay? My students are making money with it. They're learning how to do it consistently. If they're not trading with real money yet or funded account companies that has them now getting profits out of it, they're all graduating in their understanding and being able to read this stuff real time. And it's based on the stuff I'm teaching. But this 5-minute candlestick only has this one single range here when it crosses above that level here. But watch what happens when we go back into the 1-minute chart. This candlestick does that business of wicking around, but look what happens next. We trade right back down to that buy side level over here. Right in here. Using it, and then comes back to the order block right there. Now, you're not going to get that fill right there, because they may not have opened up trading for you on your brokerage firm. I have experienced this before. I experienced it when I was trading Forex. I experienced it with FXCM. I experienced it with, well, I'm not going to sit here and name brokers because it's going to sound like I'm advertising, but FXCM is trash. To say, in case you're wondering if that's a good broker, it's trash. FXCM was trash. I didn't like them when I used them, and I'm glad they got kicked out of the US. Boom, there you go, I said it again. But you won't get these types of fills. Now, if this was like 20 minutes after non-farm payroll releases, and you see it trade back down, something like that, then yeah, you can get filled plus the tick. So it's this opening price here plus 1 tick. You got a limit order, you're going to get filled on that, but you're not going to get filled on non-farm payroll the first 3 minutes or so. Just expect that it ain't going to happen. So what that does is it completely removes the necessity for you to feel like you got to be a part of it. So what do you do then? Take a step back and then read what it's telling us. What's price trying to indicate to us? It defended initially what? The sell side. It's more likely it's going to draw up into take out buy side. Okay, but it left the sell side. So it is, for me, for my personal taste, I wouldn't want to take a short reaching for the sell side on that 15-minute time frame. Allergies are kicking in. So below these lows here, that sell side hasn't been engaged yet. I'm not interested in taking that trade because what I had set up for as a downside objective was already arrived at, and you saw me execute on that. So when that daily fair value got low, was traded to, I'm no longer interested in being a participant in this weekly candle. I'm done. It expired for me. I'll miss moves if it keeps going lower. That's okay. Look. If you aren't content with finding setups that could yield you 100,000 in one entry, you're never going to be satisfied. You have to be satisfied with getting 5 handles in the S&P consistently. You got to be content with getting 10 to 15 handles in the NASDAQ consistently. You have to start there. If you can't start there and bloom where you're planted, you're never going to make these big sizable gains that you're trying to make or aspire to. You have to have very small little modular goals in the beginning. And that's good to have them. Very, very small, humbling beginnings. Like you want to have a humble beginning when you start this. If you start off right out the gate with, everything's got to be a dopamine hit, you're increasing the difficulty level beyond all measure. Like you can't even imagine how hard it's going to be for you until you start realizing it and doing it. So let's go into what we're going to do here. Let's go into, I'm in a 1 minute chart. I'm trying to think. I want to show it to you with a naked chart. And I'm running the risk of getting rid of all my annotations. So let's do it like this. Let's go scorched earth. Okay. So we are looking at price action negative. Naked. And if we look at this indicator is this right here. Let me hide that. Thank you again, Flux. But the daily chart. Let's go to a daily chart, and we'll flesh out what good old ICT got lucky with. Apparently, I was running recordings on 15 different laptops, which I don't own 15 laptops. I'm recording multiple screens, but I got lucky to get in at the high and out at the low. That's impressive. All right, so if you recall what I outlined on the daily chart for NQ last week and going into this week, you'll see that in the live streams. You'll see that also in the markups and the screenshots that I was teaching Caleb to do. If you watch it on his channel is at official Caleb Huddleston, all together. Make sure you're spelling it correctly because there's people out there using lowercase letters and uppercase letters to trick you into thinking that's what it is. He's got over 20-some thousand followers as of right now. But again, the easiest way to do it is go on my community tab on my YouTube channel, and you'll see me actually linking and posting the videos that are being hosted on his channel. Okay. And I'll flesh this out real quick for you again, so that way you can see it. I mentioned how we were likely to trade down into this fair value gap for the week. That's what I wanted to see happen this week. Okay. So because we have that, let's do it this way. You want to annotate that level because it's going to give you your price level over here on the price axis. And we will do it like this. And then the same thing, hold down control, drag it up, and you can get that. So that way we're highlighting this candlestick on August 14th, Wednesday, 2024. That candle's low. And the high on candlestick of August 12th, it's a Monday. So that high and this candle's low. And this one single candle, see this right here? That little fluctuation between this candle's high and that following candle's low, that area right there, that is a fair value gap. It's a buy side imbalance, sell side inefficiency. That means for the market to efficiently deliver fair value pricing. It's one of those textbooks definitions, right, Hannah? This buy side imbalance, sell side inefficiency is lacking what? Efficient delivery on the downside. That means sell side delivery. Okay, so for every range that goes up, an efficient delivery model is the price has to be offered going back down the same range. That's what a fair value gap is. Okay, anybody tells you anything other than that, they're literally making stuff up. They have no idea what they're talking about. They're certainly not going to execute like you're seeing me execute or define it beforehand. They'll always talk about it after it was already a fair value gap. This one here was outlined to you in advance, and I told you that I was looking for that as a downside objective this week. Notice what goes on beyond that candlestick's high to the left. Look over to the left. What do you see? Well, the first candle is this one here, the body in that. So you have a volume imbalance down here. So let's play devil's advocate for a second. If price wants to go lower, maybe it goes lower today. I won't be on board with it. I'm done. When I'm done this live stream, I don't have to edit anything. I love live streaming for that reason, because it is what it is. What I said. I don't have to go in and edit. Like, it took a lot for me to edit that 18 hours of recorded session to get it down to a time limit, so that way it's palatable. I'm not going to try to take any more trades today. I'm going to relax. I'm going to do things around the house. This volume imbalance would be the next draw on liquidity that goes below the consequent encroachment of this wick. So you would define the range like this. Let me make it a little bit bigger like that. So where we're at right now in price, we're up here. Half of that wick, that's consequent encroachment. Look how close we got to it. The volume imbalance down here is the next one. I started with my allergies yesterday and all this laughing. It's stirred up even more, so I'm a little congested. But then you have this wick, you would do the same thing, and that basically lays inside of this volume imbalance. And then the same thing here. And the same thing with these wicks, all these discount wicks, you want to annotate those. Those are levels that I'm going to have on my notepad should we get below this on a closing basis. This being this candlestick's high, which forms this fair value gap. So as we start to trade down, this is a lot of balanced price range. What makes it balanced price range? It's offering sell side delivery. It means any movement, like when it drops like this is sell side delivery. This candlestick's close up is buy side delivery. It just simply means that the market has gone up or down. It's going up to go into inefficiencies above market price, or it's going up to take out buy side liquidity. That means buy stops, or trigger pending orders to buy on a stop for a new position, or to trigger buy stops that are protecting, hypothetically, any short position. It drops to go down to an inefficiency below market price. It's like a fair value gap or something like that, or opening range gap, something to that degree. Or it goes below old lows for sell stops. Either it puts a trader in short on a breakout going lower, or it protects long positions, hypothetically. Okay, so that's the only two mechanisms that causes price to go up or down. There's nothing else. There's literally nothing else that's going on. When they reprice manual intervention, they're still taking it to price levels that I just defined, but just going to do it farther outside the extreme normal range. They're doing it quicker, like that. And you don't many times get a chance to participate in those types of moves. And that's okay. You don't need them. You don't need those types of moves. There's plenty of other stuff out there to trade. So I demystified everything again for you. Price only goes up for inefficiencies or buy-side liquidity, or it goes down for inefficiencies or for sell stops. That's it. There's no other reason for price to go up and down. The buying and selling pressure, okay, a very interesting study. For those that are really trying to debunk the algorithm, okay, there is no algorithm. I'm out here to refute the ICT claim. Okay. Do a real in-depth study on the volume, how many contracts it took for price to move every single intraday price move. The largest one in the session, like in the morning, do it in the afternoon, okay? And see how many handles the prices traverse to do that. As soon as you start seeing how much it will move, and there's this wide disparity amount, how many contracts it takes. When I was being interviewed by Corbs, he's the only one I ever sat down and did a face-to-face with. The question I asked him was, how many contracts does it take to cause price to go up? Well, just one, right? Right. What happens when price has a goal? It's being inspired, let's say it that way, to get to a particular price level. It will skip. It'll create these little gaps, okay? And these gaps are what we are targeting, these little inefficiencies. Because if we're aiming for, like I outlined this week, I'm going to take all this stuff off. Just know that we have a lot of things to factor in here. If we go lower, it's going to be potentially spotty, because then we have all this back and forth in here. So it's going to take a real move to get through all this mess in here. We have volume imbalances. Like, this is a mess. Like, this is a lot of sloppy stuff in here. The cleanest price delivery was moving from here down into this inefficiency. That's why I said this ends it for me. I'm done for the week. If it touches this level here, which is where you saw my cover on my short, that's it for me. Because then what has happened is, to expecting lower prices, I'm going to have to weather through all these questionable levels. Can it go down there and smash right through it? Absolutely it can. Is it likely to do that? No. So am I trading with high probability if I'm holding onto my short? If I would have held onto my short, I would have been nervous with the non-farm payroll release. I would have been nervous after 9:30 opening, because I have all these other factors to start weighing out. Okay, should I hold on my trade? Should I not? Versus, I know what I was looking for in the commentary and the analysis for this week. We were already eyeballing this. Okay, the low end of it, that's the best target. That's the best. So I had my limit order to get that, knowing that because it's Friday, it's non-farm payroll, it's going to be probably a little bit more animated. It may color outside the lines and go just below that candlestick's high. So that was me finessing. You can see me in the video adjusting my limit order, because I want to make sure I get the best, factoring the spread. Okay. My original profit objective would have made me a couple $100 more, but I wanted to make sure that the spread touching this candlestick's high, when it trades down there, I want to be executed. I want to get those 14 contracts off. So if those 14 contracts get peeled off, I have to have a price level with that limit order to cover that short position that will afford me the opportunity to see 14 contracts clear. Just because it touches this level down here doesn't mean, like, say for instance, say you get to a point where you're trading with 100 contracts. You have 100 cars on this run. If you're using a limit order, you may not get them all off. It might just say, no, it can't fill you. You want these 50 off at that price. I can't fill you. There isn't enough buyers on the other side at that price at that given instant that they're going to pair you with. Boom. There it is. It's done. So you don't get those exits. And then if it starts to retrace against you, like we've seen this morning, that's a little disenchanting. It's not fun. I don't like those types of instances. So there are times where it demands a little bit more humble exits. You have to be willing to say, okay, I believe it's going to touch this candlestick's high as it's dropping down, but I want to make sure I get out. Like, I want to get paid. I want my execution to, I don't want my funded account challenge or my funded account or my live account or whatever it is that you may be using in trading. I want to make sure that I get out. Just touching the level is not enough. But what you want to start doing is building in this mindset where you will expect that level of precision, but you don't need that level of precision to be extremely profitable with your exits. You know what I'm saying? So in other words, say whatever that price is, in this case, it's the high of that candle. Watch this up here, upper left-hand corner. 18,765.25. So what's wrong with trying to get out of 18,770? Oh, that's not precise. That's not precision. Why? You're telling me that if you were short and you had an open unrealized profit of, say, 50 handles, okay? Not like what I did, 300, almost 360 handles. How about that? 18,770. Again, watch that price here. You're not getting 765 and a quarter with your exit. Not while you're trying to groom yourself into seeing these things pan out consistently. You want to be able to afford yourself an exit. So you expect to touch that level with price, and that's your moral victory. That's your trophy. And that's what you put in your journal. I'm pleased. I'm excited. I was so stoked to see price trade down to that level. It was amazing to see it drop down there and hit that perfectly. And you note the time and you put a little screenshot and you say, this is what it feels like for we're holding onto a trade and it pans out like this. But I'm happy and I'm comfortable that I don't need to have that level of precision for exits. I'm growing in my precision. So in this case, instead of getting 18,765 and a quarter as your limit would have to be 18,765.50. That is not much wiggle room. That is, and that's not a lot. Like you could very easily not get filled if it stops dead on its delivery at 765 and a quarter. How many contracts are going to be traded at that price with one tick variance, right? So if you went into it with the 18,770 level, did I just drop a level on there? Here it is. Say this is your price that you're trying to get. Like you can't even barely see it, right? It's not much of a difference. Look. And you're going to argue, say that's not precise enough? Come on. You have to trade with the expectation that you're trying to get filled too. So it's a management of all these concerns and expectations, but your expectation for precision and perfection, that needs to be relegated to your journal. Cheerlead yourself there. But in your trading, you have to afford yourself a common sense exit strategy. Okay, it's a low-hanging fruit threshold where you're not demanding that your exits are the best of the best of the best. I've missed out on some amazing exits, and I've missed out on some amazing like the top tick or the bottom tick of moves. I've had them in my grasp, but the spread denied me. It's exciting, it's exhilarating seeing it happen like that. I'm like, man, I had it pegged, but the fill wasn't there. So I can feel great that I had it dialed in, but I didn't execute properly. So I have to keep myself grounded with my ego and say, you're good, kid, but you're not that good. So and just allow yourself to operate in the market with your orders that will afford you the luxuries of getting in and getting out. You're going to have a whole lot more liquidity from 770 down to 765 and a quarter. There's lots of prices in between there, lots of individual tick fluctuations, and every one little minor little fluctuation is an opportunity for an exchange and pairing of orders for buyers and sellers to meet. And you want to afford yourself an ample supply of that when you're trying to exit, and just yield yourself to, yeah, it went to where I wanted it to go, and I'm happy with that, but I don't need that. Hopefully that makes sense. I've answered a dozen of individuals that left comments around struggling with exits and how to pick the right price and all that, because they're trying to impress me and they're trying to impress themselves. Knowing where it's going to go to with the perfection, that is just for you to feel good. That's not how you're going to execute. If you try to do that, you're going to miss entries, you're going to miss exits, and or hold on to them because you want them to hit that level with your exit, and then the price could be returning against you, and you are more fixed on the outcome being perfect versus recognizing that you're in a trade now that's turned around on you, and you've married the vein. Okay, gold miners used to have the expression, so and so's married the vein. In other words, the location that's been mined for gold, it's dried up now. It's no more gold there. But because he's found one little nugget there, he's married the vein. He thinks it's going to be nothing but more gold. So he spends his time constantly digging and panhandling through there, getting nothing but wasted time. So you can do that with your winning trades. You can turn a really good trade into something that's dog mess, really. So we're below. I just want to put these on here before I leave this time frame. I hope what I'm saying is encouraging and not discouraging you. But I know sometimes you want to be like an X-Man. And remember, Deadpool wasn't an X-Man. Deadpool, spirit animal. All right, so anyway, that's the levels I'm using going forward. So we'll keep those in mind. But this fair value gap is what I was mentioning this week. That was all I was looking for. Me personally, as the trader, ICT, I'm not interested needing it to go lower than that. Can it? Absolutely can. But I don't personally need that. So where do I want to engage? I want to engage in anything that gets me short. So how can I do that? How can I frame a short in a market that has had this big colossal slide down, where I had some of the back end of that move, but I didn't get the first part of it there because it's coming on the heels of what? A holiday. So I'm going to let the morning session trade without me. And at 1:30 p.m., that means the New York hour lunch, which is technically 2 hours, 11:30 to 1:30. In that time frame, that is when the lunch macro, whatever has happened in the morning session, during those 2 hours, there's always some kind of retracement against whatever's already happened in the morning. That is all the lunch macro is. That's it. It's all it is. It just retraces on orders that would be trailed up if it's been going higher, or if it's been going lower in price, they trail the stop losses lower to lock in their profits. During the 11:30 to 1:30, they're very, very specific times. Don't take my word for it. I want you to go back, and every single time you log intraday price action, make a vertical line at 11:30 and a vertical line at 1:30, and then watch what price is doing in those 2 hours. It does it so frequently that could be your model. That could be your thing. Like, you don't even trade. Don't even worry about trading the open. Who cares about that? Whatever somebody's been doing, they were smart. They did something right. They were long in the initial run of the move, or they were short in the initial run of the move. During that 11:30 to 12:30, 11:30 to 1:30 p.m. Eastern Standard Time. That means always have your time on TradingView set to New York. If you're using your local time, you're doing it wrong. I don't care who tells you what. I don't care where you live. I don't care. You're not following what the algorithm's going to do. You're not following the logic I'm teaching with, and you're not going to be successful because you're doing things wrong. Okay, so you have to always have your chart set to New York local time. And at 11:30 and 1:30, that defines your lunch macro time. But at the end of that, at 1:30 p.m. Eastern Standard Time, that starts the afternoon session. So that's your first 30 minutes leading up to 2 o'clock. In that first 30 minutes, you're going to see fair value gaps form. You're going to see other PDA. Don't think that my fair value gap in the first 30 minutes of 9:30 to 10 o'clock, like that's the only one trick pony. Every single one of my PD arrays exists in that same element too. Remember, I'm just teaching one principle, one little component. Breaker blocks, vacuum blocks, propulsion blocks, institutional order flow entry drill. Technically, it's still kind of fair value gap. Every PD array is in there. Volume imbalance. If it forms the first one, it's the same premise. Oh, explosion of opportunities just came in, didn't it? See, you think it's just a one-trick pony around here. Honey, listen to me. I have an arsenal. I have stuff nobody's seen before, but you are selling yourself short thinking that you don't have enough already. Like you have more than you would ever need. I don't never need to do anything else ever again talking about none of this. You have more than enough. But I know how it is. You want more. And I love Sharon. I love Sharon. I love my wife more. Her name ain't Sharon, but I love Sharon. And I love the feedback that I get when people are like, wow, I used this. I went right out there and I saw it in price action and look what I just did. I tape read this and boom, 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 and there it is. What I don't want you doing, and this is what I'm seeing in the comment section. There's one individual that's saying, I hurt myself. I made $1,500 and then I lost $1,000 in the next day. And please encourage me. Every video I'm encouraging you. I'm encouraging all of you to follow the rules. If you're taking what I'm doing in a lecture, okay, I mean this. If you're taking what I'm teaching in a lecture that given day or the very next day and you're trying to go out there and trade with it with your real money, with your funded account challenge or your funded account, you are doing it wrong. I know that the tendencies for you to want to just go out there and prove that it's going to make you money. And if it does, man, you're going to be ICT for life. I don't want you ICT for life. I want you incorporated for life. YOU, incorporated. You, the enterprise, this conglomerate that you're building, you as a success story. I want you to be that for life. I don't want you Team ICT. Team ICT is nothing. There's no ICT team. I'm a one-man army. I'm training you all to be a one-man or woman army. That's it. You don't need anybody else. You don't need to plug in anybody else. You don't need any other kind of resources. You are capable of doing everything by yourself. Once you learn this stuff, no one can take it from you, and they can't discount it. Who's going to say you can't do what I'm doing or more than I'm showing? Nobody. Just you. But stop trying to go out there and try to use it right away. You haven't spent enough time. Listen, we just started doing mentorship. It's only been a month. And some of you think that that's, well, you're too long in it now, man. I should already be out there trading with it. That's a moronic perspective. That's dollar menu mentorship, mentor advice. I'm not telling you to do that. I'm not telling you to do that at all. I'm telling you to do the opposite. Sit still. You shouldn't even be taking any trades with real money this year. This year. That's the reality. And if you don't like that, don't watch my videos. I mean that because I don't like when you leave comments, and I'm not getting a lot of them, but I'm getting them. I tried to use this and I lost money. Can you tell me what I did wrong? You started using it before you understood how to use it. Just like I did when I bought my ZX14 in 2008. That was the fastest motorcycle. Fastest one. I've never owned a motorcycle before. Midlife crisis. I'm 35 years old. Hey, you know what I need to do? I need a rocket. I got everything else I need. I don't need anything else. But you know what I need? I need a rocket. So I bought it. And a year later, on March 9th, 2009, at 1 o'clock in the afternoon, I should have died. And now my body hurts every single day because I did something impulsively, recklessly, buying and operating something that I didn't have the skill set to do that. And you don't have the skill set to use this information yet with real money. With real risk, you don't have that experience. And I didn't want to pull up the next somebody at a light and say, dude, the 600, look at you. I didn't want that feeling. So I told myself, I'll be responsible. I won't drive it fast. Deep down inside, I couldn't wait to go 200 mile an hour. Couldn't wait, right? So, and it wasn't but 3 weeks later, I'm doing 155 miles an hour on Pulaski Highway in front of Oak Grove Liquors going north to Aberdeen area, going that direction, away from the city, basically in Baltimore. 155 mile an hour in an area where there's multiple intersections. People don't even stop at the stop sign. And I was chasing after a pony boy in a Mustang that was encouraging me. And that was Satan. I knew that was. He was trying to get me to chase, and I did. I was right on his bumper. And then all of a sudden, reality hit me. I started feeling like my stop loss was about to get ran. And my body started shaking. And I realized that if this guy was suicidal or nuts and he slams his brakes and brake checks me, I'm dead. And then if that wasn't enough, they're doing construction down the road in front of me, and all the cones that are luring us over to the left-hand lane, all this is happening instantly. I'm getting all this rush of information inside of a window of visibility of 5 inches. If you've ever been over 100 and some mile an hour on a motorcycle, you get this tunnel vision. And it's exciting. It's exhilarating. But you can only see about 5 inches in diameter. If you hold your hands out in front of you and connect your thumb tips together and your index fingers and try to make that in like a perfect circle at your arm's length, that's all you see when you're going real fast on a motorcycle. Everything else is like warp speed blur. And it's weird. Like you can watch these guys on YouTube and they're going real fast and you see everything. It's like, wow, this is great. That's what I did. But it's altogether something different. The first time you experience that warp speed tunnel vision, it is scary. Like it's very, very scary. And the only thing I could see in that little tiny little diameter was this young boy looking in the rearview mirror, giving me the hang loose, shaking his thumb and pinky at me like, yeah, go, go, go. And I started panicking. I literally had a panic attack on the motorcycle. I was literally gripping this thing. I pulled a groin muscle nearly, just trying to keep myself holding on to this motorcycle. But I didn't want to look weak in front of him. I didn't want to look like I didn't know what I was doing. But I was scared to death. And I started realizing I'm so fast, you just can't stop a motorcycle. Like you have to learn how to navigate around things because stopping is not always the best solution because you just can't stop. You don't have enough weight to bring you to a stop. So all these things came up in my mind. And you're probably thinking, what's this got to do with trading? It has everything to do with what you're doing wrong. I should have never been in that situation 3 weeks after buying the ZX14 Ninja, Kawasaki Ninja in 2008. 3 weeks after buying my first motorcycle, I'm at 155 miles an hour, ready to become a statistic. Stupidly. Chasing after something that was all wrong. What was I doing there? I was looking at an influencer on the road, just like you're watching influencers like me and other people on the internet. Wow, that Mustang boy thinks he's fast. Watch this. I'm going to go smoke him. I'm doing everything for the wrong reasons. And I'm opening myself for risk. He's not at risk. He's inside of his car safe. He's got better brakes. He has the ability to stop better than I do. And I'm literally one front wheel width away from his bumper, staring at him in his rearview mirror through his back window. With no skill. I have zero skill. None at the time. None. Thank God he struck me with fear because I was literally like, okay, I'm coming off the acceleration. And I literally wanted to throw up. Like I was scared. Like I was genuinely scared to death because I was being piped into one lane and the lanes were already stacking up ahead of him. And I don't have much time to bring myself down in speed. Downshift, downshift, downshift. And I get up to the light. And of course, you know me, I'm a man. He pulls up next to me. He's looking at me. Yeah. He rolls his window down. And I got my visor down. He can't see me. I'm panting and I'm shaking. So what I do the old cool biker lean. I put my hands on my leg and I put my hands on the tank and I'm pressing my arms down on the tank because I don't want anybody seeing I'm shaking. I'm scared to death. I'm hopped up on goofballs, adrenaline, and fear. And I'm thanking the good Lord that I did not become a pink missed. I would have came apart at that speed. It would have been a closed coffin. And my uncle, who was like my big brother, September 4th, 1979, at noon that day, he took me for a ride on his motorcycle. I could still smell his sweat on the back of his t-shirt, holding on to him. And it was the coolest moment ever. And 12 hours later, he died on that same road, not just a quarter mile from where I was at that moment. And it all hit me at that time. And I was like, okay, I can't even take it anymore. I'm gonna turn right and I'll go down middle of the road. I'll go that direction. I just got to get off this highway. And I literally took my ass home. And I sat there and I thought to myself, man, I could have died doing something stupid. I could have done something really, really dumb. And here's the thing. I survived that. I knew better not to do it again, but a year later, my first ride of the spring, March 9th, 2009. It's a good day out here. I'm going to go take my bike out. Let it run for 20 minutes. It's been sitting. Get out there. Boom. Open it up. Bam. And an old guy comes in and puts me into a curb. And I fly 50 mile an hour over the handlebars, 85 feet in the air, land on my head, break my clavicle 2 places, break 3 ribs, detach my scapula, crush all of my molars in my mouth. All of my molars, all my chewing teeth are crushed. I should have been dead. And I have spinal injuries as a result of that. I didn't learn my lesson. I was given grace. I didn't learn my lesson. I figured I've been driving for a year now. I've been riding for a year now. I haven't really been ridden for a year. But I allowed my impulses because I saw other people riding around that day. I was like, you know what? I'm gonna take my bike out. And I was influenced by other people that are doing things recklessly too. And that's exactly what you're doing when you watch my content or anybody else's content. You're thinking, I want to do what they're doing. I want to have that same fun. Wow, that must be really cool. They're trading with 20 accounts. They got a $10,000 payout. They got this, they got that. ICT just did a $100,000 trade over here. What if I did that with 20 accounts? I could be this and I could be that. Don't let me influence you like that. Do not let me influence you like that. That's not what I'm here for. I'm here to remind you what's possible, but you're going to work your ass off to get to that level. And there's no reason to take stupid high-level risks. I would have left my family behind the year before, but thankfully God said no. And because I didn't listen, he didn't give me anxiety on that second ride. He let me have all of it up to the point of almost death. And he has, still to this day, every spring, I see other motorcyclists out there, and I always have the itch. Like, I'm thinking to myself, I can get one. I'll get me one of the cruisers. And as soon as I start feeling that way, boom, my back goes into major spasms, and I have it for weeks. That's the Lord telling me, you're stupid. You're being stupid right now. How many times I gotta keep you from doing this? That's a natural human tendency. Don't walk on the grass. I'm moonwalking on it. That's what we do as humans. We do everything we're not supposed to do. That's why everybody fails in this industry, because it's so hard to keep control over yourself. And then you have social media, people like me and other people out there that are telling people what they do, what they can learn from you, whatever. Do not let me influence you to do things ahead of schedule. That's why I tell you all the time, take your time. There's no rush. These markets are still going to be trading 6 months from now. Just relax. If you don't give yourself the ability to see it properly, you might become that pink mist and you're gone. What can you do about it then? Nothing. You've wrecked yourself. You've lost more money. You'll never probably want to trade ever again because you did it wrong. But you'll think that this stuff doesn't work. And that's exactly what these people do on the internet. They tried to do something quick with it, or they thought it was going to be 1, 2, 3, watch a video in 5 minutes. Oh, it works because I can prove it in 5 minutes. No, it doesn't work like that. So my encouragement to you, young man, is stop trying to use it right away. You don't know what you're doing. Just like I didn't know how to use all that speed and power in 2008 and in 2009. And ultimately, it could have ended me. So while I still love bikes, I love them, I can't buy one and I can't ride one because I'm afraid that I won't have the outcome that still keeps me here. And I live with pain chronically every single day because I did not listen to good common sense the year before. I should have got rid of the bike because I wasn't able to compose myself and be responsible as a rider. I was literally, a squid. I was out there with not the proper equipment, speeding around with no skill, doing dumb stuff. And I watch kids every single week in our area end up on the news because they do that same stuff. They're influenced by their friends and people online or whatever, and they buy bikes they can't handle it. And what you're learning from me is faster and powerful than that ZX13 was. Faster than a Hayabusa, faster than all that stuff. This stuff is rocket science. And you're out there trying to treat it like it's checkers. Oh, I'm going to go out here and it's all I got to do is this, this, this. And I'm like, no, you have no idea. And that's why I teach the way I do. My concepts are amazing. They're perfect. They're the market. But if you don't have the right mindset or control over yourself, you'll hurt yourself. And I'm ICT, and I just told you something about my personal life that as a human being, I abandoned the rules that I live by. I saw something, I was influenced by other people. I want that bike. And I went to the shop and said, what's the fastest bike right now? That's what I asked for. I didn't say, can you give me something as a new rider? That was not what I asked for. I want the fastest, what everybody wants right now. That's the bike I want. And I walked out here with cash, boom. And I drove it home, brand new tire. Listen, for people that ride bikes, you know how stupid this was. I didn't leave it there and pick it up the next day because it was thunderstorming. And I drove it home in the rain. And I had people laying on their horns behind me because I knew the wrong little movement, I'm probably going to go down with this thing because brand new tires are too smooth and you're going to hydroplane real easy. And I drove home in a thunderstorm with probably a mile of cars behind me. Some of them went around me and beat the horn, almost cut me off to show me how they're mad at me. But I was doing everything wrong about being a biker. Everything wrong. I checked every box. Now I live with pain. You can hurt yourself financially beyond your comprehension if you do things wrong. You could owe more money than you have trading in environments like a CPI or PPI number. Say you're ahead of it and you don't know that it's coming out in the marketplace and you're short and then they reprice it hundreds of handles against you. You're not getting filled even if you had a stop loss. Now you owe the broker more money than you have in the account, than you have in your bank account, than you're going to earn in the next couple months if you had no bills. You see what I'm trying to do? I'm trying to prevent all those types of things. So while I may be a character that people like to take shots at, and I love it, but I'm also trying to be a voice of reason because you literally need to learn this the proper way. And it needs to be at a slow pace. Because if you think that you're going to watch a video and figure, oh, I know what I'm doing here, and then you go out there and try it with real money, and you don't know everything about what you're doing and how you think, you might add to a losing position because you think, no, it's right because ICT said so. I have students that act like a fan. I don't want fans. I'm not a celebrity. I don't like fandom. I want people that are responsible and say, you know what? I love the fact that you're responding to people like this and you're reminding us of the risks. Because there's real risks in this, folks. More than you realize. And you don't really appreciate it until you first start doing it. And then all the things that you never imagined were a factor, they are much more significant factors than the things you're thinking are big rocks in the road for you to find success. The things you're worrying about right now that you think are impeding your ability to do this, they're small, little, tiny pebbles on the road. They're not going to do anything for you. They're not going to hold you back, but you think they are. The bigger things are the ones that you're going to run into in the road where it's like a brick wall. And you're like, wow, I didn't see that coming. I didn't think it was ever going to happen to me. Right. And until you have someone telling you this is what's likely to occur if you try to do this and do that, at least you're aware of it. You're not taken by surprise. And if the people that are being responsible are listening to me, they're like, okay, I'm not doing that because I don't want to find out that I'm not prepared and I hurt myself in the process. That's why the women do better because they're not extreme risk takers like men are, like I was in 2008, like I was in 2009, and I live with chronic pain now. So anyway, I know. Dude, nobody cares about your motorcycle. Nobody cares about your back pain. So if you look at the drop here on Tuesday, I was in the latter half of it. And you saw that on the execution videos on the YouTube channel. The next day, at Wednesday, we have a candlestick high here. Now watch. This, that is your SIBI. This is your sell side imbalance, buy side inefficiency. This big displacement, lower here, this up close candle and this up close candle, that makes all one singular bearish order block. It's not the last up close candle. When I taught it initially, I taught it that way because I knew everybody's going to come out there and start teaching courses with it. There are times where I will do this. In the rules for using the up close candle, the last one before the drop down, that definition will be in my book because it's in written format. That means everything after that will be just parroting the written works of me. The audio commentary, the rules, okay, I have slowly sprinkled the logic out because I'm competing with every plagiarist in the world right now that wants to put this into a book form. They all want to be able to say they had it in their book first. That's why I'm doing it here in my own voice on YouTube. And there's millions of you now have watched me talk about this and teach it. And I'm the only one out here demonstrating it properly. You might have a winning trade here and there, but you don't even know why your trade worked. Like, you don't even know why that order block worked or that inversion fair value gap did what it was supposed to do. You assumed that you could handle that ZX14 and you jumped on it and you took a trade. You just happened to live through it like I did in 2008. And I barely lived through it in 2009. You see the difference? So because of this displacement lower, we can't use this candlestick high here to that candlestick's low. We have to refer to the truest beginning point of the order block, which is this run up. Okay, something here came into the marketplace that was unbeknownst to me. I don't care. I'm not trading in the morning session. But I saw what it was doing. So I went in and I worked with the position of getting short inside of this daily range. The latter portion of it, the afternoon session, post 1:30 p.m. Eastern Standard Time. So we have to look at this candlestick here. So what three price points here on this candlestick are pertinent or useful? We're down into the volume imbalance. See that? And now what you'll do is you will look at this wick here, and you'll look at this wick here. Divide that in half on both of them. I'm not going to do it because I'm trying to get through this lecture already longer than I want it to be. It's always like that. If I say it's going to be short, it's going to be a long one. But I love over delivering. The difference between this candlestick's low and that candlestick's low. Okay, you see that? What is that? That's your fair value gap. This is just a SIBI. This is a fair value gap. And this is why when I look at other people on YouTube and they'll say, oh, here's a fair value gap. That's not a fair value gap. That's not a fair value gap. That's not a imbalance that I'm going to utilize. See, what you're thinking is, because you've listened to me with graduated explanations, because I'm giving a little bit like a slow leak, okay? I'm leaking out. I'm teaching, but I'm not giving you everything because you all out there see people trying to pretend that they know what I'm teaching or they have it figured out, and they're trying to make courses and now they're writing books on Amazon because it's very easy for someone to throw something together and Amazon spits it out there, okay? I could have my books out there in 2 weeks, but I'm fighting with my producer, my publisher, about the way I want my covers to be because I only get one chance to do this. Once I've released the book for public, I want it my way. And they're wrestling with, costs are going to be. I don't care. I'm not doing it to make money. But see, that's not what they see. They want to make money with it. Okay, so we're kind of back and forth with it over that. So it'll be released when we finalize all that stuff because I want the covers to look exactly how I want them. And I'm getting a little bit of resistance because of them saying the cost and what I want to receive as a royalty for each book too. It's a little bit of a back and forth. And if you keep messing around, I'm just going to self-publish and I'll get all the money. So if you look at the low here to that candlestick's high, that is your real fair value gap. Other folks on the internet may see this and say, okay, ICT says that the best portion of shorts are going to occur in the lower half of that, and we'll leave the upper half open. And that is true when you're trading and utilizing a fair value gap that is a SIBI, but that is not what's going on here. That's why I tell you all the time, there is no one trick pony explanation for a fair value gap. You have to understand other factors and other PD arrays. You want a fast track to selling books and courses and being mentors because it's easy, quick money. But when people realize that there's someone out there that's authored it, it's teaching it for free, you're losing subs, you're losing subscription costs and fees coming in a month. And then it's going to make you mad and you're going to hate me. And you're going to create sock puppet accounts. You're going to troll me. And you're going to leave comments in my comment section that make me smile and make me make longer videos because I like doing it. That is not what we're seeing here. This is a change in the state of delivery right there, that opening price. In a perfect world, price would do this. It would trade up to that level there, maybe just a little bit above it, and then roll over and go lower. That's the perfect world. But if we're thinking about things algorithmically, and I'm teaching you how to use these PD arrays properly, not look for an imbalance that completely closes in, then I'm going to go long or short based on that. That is the worst approach to doing that. That's the worst. That's the lowest form of trading with imbalances. That's the lowest form. Why would you want to do that? You're a bottom feeder doing that. There's more likelihood that your trade's going to fail if you trade like that than if you use the logic I'm teaching, which is you don't want to see them fill in. You don't want to see them fill in. So if this is the change in the state of delivery, that means the price was offered going up. So this is buy side delivery. That means the movement of prices going up. Then you have this displacement lower that overtakes that candlestick's low. Your reference point goes right back to that opening price. That's the change in the state of delivery. If you look at this price right here, this is on a, well, let's just do it. And if I talk about it, it's one thing, but we're going to look at Tuesday's price action, September 3rd, and the price is being annotated here on that opening candle, that price of that opening on this individual candlestick of Thursday, August 29th. So when we drop down to a lower time frame, this blue line is referencing this candlestick's opening price. Okay, let's watch. We'll drop down to an hourly chart. You already see it, don't you? You see it? What's going on there? It's leaving all this open. Light bulbs are coming on. Right? Let me go back to the daily chart. I want you to fully understand what I'm showing you. This candlestick, that opening price, we're drawing that out in the future. When price reaches this level, let me look at this. I know when I change time frames, I get a lot of comments that they're saying, can you go slower when you talk about price and you change the time frames? I get lost. I get it. But that's the benefit of having a video. And it's also where you use the pause button and you compare what my chart's showing. I always make a point of putting my cursor on the individual candlestick. So that way, if you're really trying to learn this, you're going to be doing this same thing in your own charts. Because if you're not doing it in your own charts and trying to replicate what I'm showing you here in your own charts with your own annotations, I mean this sincerely, okay? I'm not trying to be mean-spirited because I really want you to learn. I'm talking to Caleb right now. But other people are they're commenting saying that I'm going too fast or I'm trying to confuse them or I'm trying to hide something. I'm literally trying to do everything I can to give you the perspective of how to find it in your own chart, which is exactly what you're supposed to be doing. My son is not going to just keep getting my charts annotating after the fact. This is the PD arrays. He's going to be expected in 2 weeks, at the end of 2 weeks, he's going to start doing it. He has to do it in his charts. That's what you're going to be doing when you trade. When you eventually get to the point when you trade with your own money or take risk with a funded account company, whatever it is, those elements of what you've been doing and practicing are all going to culminate to that moment. And if you've been only looking at what I've created, how can you be confident? You won't be. You won't be confident. You won't know what you're doing. Okay. So this box here is highlighting. We'll do a different color so it stands out a little bit differently. We'll make an ugly yellow. ICT, that's my favorite color. Look, man, I don't like yellow. Okay. So if we drop back down to a 60-minute chart, it's an hourly chart. Where are we at here? Why is that not going on to my, I think I have it set to only show on one time frame, isn't it? Yeah, I think so. All intervals. Now go back down to a 60-minute chart. There we go. Good grief. All right, so you can see what I was referring to here, where price was wicking into that. This is one time where my watermark is not working with me. So here's that opening price on that daily candlestick. That little movement to the downside, and then it rallied up. And then we had that rollover on Tuesday. Right at this moment here, look what price is doing. It's opening and trading right back up to it. It's leaving all of this open, and it's leaving all of this open. Now, think about this, young mentors, okay? You're running mentorships. You're trying to charge people money, teaching things you don't know how to use. You're going to look at this chart and say, all right, folks, I'm running a signal room. We're watching shorts. We're going to wait for price to get up into this area here. And right now you're probably getting pissed off because I'm talking about you. I don't know you by name. I know many of them in my mind I can think of right now. I'm not going to out you here. I'm telling you how to fix what you're doing wrong, because you're actually hurting people and you're defrauding people and you're teaching stuff that you don't know how to do. So because you're all here collecting and writing notes like scribes, I want you to learn how to do it right, because when I'm gone, people are going to be wanting to learn how to do this, and you're the first round of people learning directly as I'm teaching it. So you have an advantage. So doesn't it make sense to do it right and stop trying to be in a hurry to get some quick money? You can get a whole lifetime of money. I could be making $15 to $20 million every single month doing exactly what I'm doing right now, and I'm not even skipping a beat. I don't need that money. You do. So if you want a whole lifetime of educating with proper, respectable clientele that are going to say, you know what, we trust you because you're able to do it. That's what you want. You don't want people that think, wow, I have something I can teach in hindsight and I never have to do it in front of anybody or prove it. I'm telling all of you, if they're teaching smart money concepts or if they're teaching ICT stuff, unless they go out in front of the world and outline exactly how it should behave, everything, you don't even need to take a trade. Don't even do that. Tell us what the price is going to do. If they fall on their face, you just save your money. Okay? I promise you that's the easiest litmus test. You don't even need to see track records. You don't need to see trading logs. You don't need to see broker statements. Have them come out on a live stream right on YouTube. Everybody can see it. I have students that are doing it. Not all of them are teaching, obviously, but they can prove that they're doing it. The easiest way to determine whether you're going to waste your money is, can this person explain to me what price is going to do beforehand? And because I have always marketed that you're going to learn how to read price action, I cannot promise you that you're going to be profitable. Why? Because you're going to be like I was in 2008. I'm going to buy the fastest motorcycle and get out there and do stuff I'm not supposed to do. That's the reason why I teach the way I teach, folks. So all you foreigners that come at me all the time, oh, bro, you're a scammer. Fuck you. You have no idea what you're talking about. You're broke. I'm not. So this inefficiency right here, and this inefficiency, it should never be traded to. Why would you expect these two fair value gaps to ever be considered at all if it's inside of that bearish fair value gap and it's above the change in the state of delivery? That means it's going to do what? It's just going to go into it a little bit. And then you want to see these things stay open, because that indicates that we're really heavy. We're real heavy. We don't need to see it go back up in the air. But many of you that are trying to teach courses and mentorships or signal services, I've seen them. People send it to me. Here, look at this guy at Discord. He's trying to sell short here. He's trying to buy here. He's trying to do that. And I'm just responding with this: the blind leading the blind. You don't know what you're doing. Every little separation between 3 candles like this is not a fair value gap. It's not. This is further evidence to indicate that you have to have more intel about the other PD arrays, because no matter which one you start with, it could be the breaker block, it could be a propulsion block, it could be a, well, volume balance or fair value gap. You have to understand the other ones, even if it's a small little brief acknowledgement. Okay, I recognize it, but that's not what I'm going to trade on. You have to refer to it because it's part of the whole narrative of what price is doing. If I wanted to do it and it was possible, I could just say, here's the order block theory, and you never need to worry about any other candlestick but just this one. You can't. It's impossible to do that because you have to have other information from other facets of what price was doing. That's why you're angry at me, because you think I'm hiding something from you when I've told you that you have to do these things to get the answers you're asking for. I know my limitation as a human being, as a teacher. I'm not going to reach to the levels of what you expect in answers for certain things, because those questions are answered with your own experience. And that doesn't satisfy the people that are just 1 minute trainer, 5 minute trainer, teach it to me in 20 minutes or less. I don't want students like that. I want people that are going to be highly responsible and they are aware of what's being taught and shown to them, because they can appreciate what's being shown to them because it's the truth. I can make this fraud. I can make this fluffed up and all about Lamborghinis and stuff, but I can't come out here and show you what I'm doing beforehand if that's all that it is. And that's what most of what you see on the internet right now is: show everybody else my fancy, expensive stuff. And once that happens, the novelty wears off. Then what are you left with? The people want to see you explain it. Why should it work in their own hands? Because if you can't show the logic behind why it should do something, why should anybody send you money? Why should anybody send you money for you not being able to prove that you have an understanding of what price is going to do? And you don't even need to push a button for that, folks. That's an easy litmus test. Everybody out there in education has a blank check right now waiting for them. If that's all ICT said I got to do, well, here, I can do it. Boom, there it is. Watch how many people do it, though. And watch how you get banned. Watch how you get blocked on email, how you get blocked on social media when you ask them to do this stuff. I'm ready for it. I can do this every single day. Every single day. I'm not running out of any yeast around here, okay? This baker's got all kinds of flour and yeast. I can do it all day long. But these inefficiencies they're not going to fill. They're not even going to trade back to. You don't want them to. Now, because we have that, we can drop down to a 15-minute time frame. Man, it's a watermark. Take it off, ICT. I want you to get rid of it anyway. I'm trying to pirate your stuff. I know. Clowns. All right, so here's that opening price on the daily candlestick. And it's the change in the state of delivery. And you can see it wicking up into what we saw on that hourly chart. Now we're on a 15-minute time frame. It's trading into it here. And that defines that 15-minute, or sorry, hourly inefficiency, the downside. It's just a SIBI. That's not a fair value gap that you trade. Okay, it's just showing an inefficiency, but just because there's an inefficiency doesn't mean it needs to trade up into it. You want to see where you are in the lay of the land. Where is price at? Where is it likely to go? And how's it been delivered? These two inefficiencies in price, we don't want them to trade to them. We don't want to see price go up there. But watch what happens when it starts to break lower. After returning back to that blue line, which is the opening price, on the lower up close candle on the daily chart that frames the full bearish order block. This is what you end up doing with this information. Okay, this is all part of the price delivery continuum theory. Knowing what you're looking for from one higher time frame, and then using the information from that higher time frame, what should you expect to see in price? So it gives me the confidence. It gives me, I know what I'm looking for. I know what I'm going to trade off of. I know how I'm going to place my stop based on this information. Big, huge paradigm shift. Ready? You ready? I don't hear you. Come on, ICT, I'm screaming. So it trades up into the opening of that lowest down close, up close candle that makes the bearish order block. This is the change in the state of delivery. The algorithm is going to refer back to that price. Here we are on a 15-minute time frame. Does it wick above it? Yes. Does it wick above it? Yes. Does it wick above it? Yes. How can you validate that that is really going to be an influential order block, ICT? Look at this lower time frame. What are the bodies doing? What are they doing? Are they just going through it? No. They're respecting it. Oh. So if I can see a time frame like this that's confirming it, that means this up close candle becomes a valid bearish order block. And then I can use its opening price right here. You're going to hear my stomach because I'm fasted. So it's already ground talking. We get that on that candlestick right there. We don't need a close below it. We don't need engulfing candles does this. We don't need an FU candle. All that stuff, that's all 20-year-olds working through a multi-level marketing scam ring, okay? Scammers Incorporated, okay? I got to resist myself because I could have a whole lot of fun with that, but I'm going to do it. But we have that opening price and we get it there. So that validates this as an order block. But now watch, when it does this, the next candle, what does it create? What's this? That's your first presentation. Oh, so it's not limited to 9:30 to 10 o'clock. Right. It's when you're using proper breakdown from a higher time frame down to a lower time frame, using the PD arrays in the proper context and its PD array matrix, where we're at in the lay of the land, that fair value gap, you can trade that right there. Where's your stop go? It's got to be above the order block. So your risk is entry. The lowest threshold entry is this candlestick's high. And that is, I got to move this down because or up rather. All right, the fair value gap is here. That candlestick's high is 19,183.25. So that's your entry minus one tick. So you want to get a fill. You want to make sure that you're going to get filled. That's it. Why? Because you have all these other things qualifying, confirming it. But your risk is the candlestick that is the bearish order block, this one here, because it should not go back above that. Especially now because we had this candlestick go above it and this candlestick goes above it. But prior to it validating that closing or that opening price, it didn't need to close above or below it. Let me say that one more time because I just gave a whole bunch of contradicting statements. This candlestick up close is your bearish order block. We don't know that yet until this candlestick crosses down below the opening price. It does not, on this candlestick, it does not need to close below the opening price of that to validate that as a bearish order block. What's good about this is we had this candlestick already trade above this up close candle, which is a potential, we don't know it yet, bearish order block. It wicked above its high there and it wicked above its high there. And then on this candlestick, we traded below that candlestick's opening. That validates that candlestick as a bearish order block. Any stop in this close proximity, you could use the opening of that candlestick right here. That right there, you could be entering, and you can add more into it into the fair value gap if it trades up into it. That's what I'm saying. Like you can use that as your entry mechanism. But for stop placement, you have to use the high of that candlestick plus one tick, and it never goes there. So that's your defined risk from this candlestick high minus one tick. That's your entry to this candlestick plus one tick above its high. So that's your defined risk. And you can see multiple instances where you can get in and get short on that idea, that premise. Anyway, let's go back out to a daily chart and I'll continue on with my lecture. I really missed hanging out with you guys yesterday. So here is the other wick. Guys up at the CME. Damn it, Michael, shut your mouth. You're teaching everything. Beautiful delivery there. You want to screenshot that, by the way. Right there. You won't find that in Wyckoff. You ain't going to see that in Andrew's pitchforks. My private mentorship students, that's an inside joke. All right, so anyway. All this business in here, we are not looking for that to trade up into these inefficiencies. They should stay open. So in reality, what we're saying is this candlestick's low and this candlestick's high. That's your real fair value gap. That's it right there. Now, let's think about this for a moment, okay? If that's your fair value gap, you hear that? My stomach's saying, you gotta feed me, boy. This is your high on the fair value gap, which is the low of the fair value gap, and this candlestick's low is the high of the fair value gap. So that defined range there, this section of price is inefficient in what buy side delivery because this candle moved lower. So in this little section of price action between this candlestick's low and this candlestick's high, we're only focused in this little shaded area. We wait for price to go up into it because what is that doing? It's offering the sell side delivery. That means it's overlapping this down movement between this candle's low and this candle's high. It's inefficient because it didn't have any other candlestick cross over the range defined by this candle's low and this candle's high while price was going up. That's why I use the analogy all the time, painting. You know, when you apply the paint to the wall, first moments of applying the paint with the roller, it's real lush and it's ample supply of paint. But you keep rolling, eventually that roller will run out of paint in certain parts of it, and you'll start seeing these little pockets, this little porous delivery of paint. And then what you'll have to do is you roll the roller right back up over top that same thing. Well, it's the same things occurring here. You roll the paint down, and then you're going to have these little porous pockets where it didn't create a very smooth delivery price action. We'll see that when we drop back down to lower time frames. But here it looks, you can't see that. So the only way you can see it on this time frame is defining with a fair value gap, which is why I created that concept. Then this run back up into it is overlapping that, even though it wicked and went lower, that delivery right there, that's what I'm studying that. When I was setting up that turtle soup cell, what did I teach you about turtle soups? They're reversal patterns and they're continuation patterns. You can use the fair value gap to get into a turtle soup. Stop listening to Twitter version turtle soupers, okay? I promise you, candle range theory is bullshit, okay? It's bullshit. It's absolute bullshit. So stop it. Stop it. Go out and call it every single day. Walk out here like I'm walking. Call it out, line it up, do it, trade it, and then everybody will buy your course. I promise you, they'll all buy your course and you'll be the next hero. But you're not going to do that because you're staying in the hindsight of 2020. Stop putting sock puppet comments in there. I know you're losing sales, but I don't give a shit. This range in here, it's not because I hate you. It's everybody that's trying to teach my stuff. You don't have any right to do it. All right, so this level here, I'm gonna color this one. We'll do orange and we'll make it real bold. Okay, so that way it'll be this pink reddish area that's highlighted to this candlestick's low. We're highlighting this inefficiency because it's defined by this candle's high, that candle's low. This candle's high is anchored with that broad orange color. And we're going to look at what price was doing here yesterday. And that's what I was utilizing to get short in the turtle soup. And then everything will become perfect. You'll have a clear depiction of what price is going to do because I'm showing you how I executed yesterday. My focus and aim was, I thought I left that line on here, didn't I? No. That was this one. So that price is, you want to have it on your chart with 18,552.5. And then the next one is this one. ICT's causing the crash. Don't hate the player, hate the game, baby. So, yeah, of course I'm an anime fan. What are you talking about? So this candlestick high on Wednesday, okay? That run above that, that's my turtle soup. So if I'm looking for this level down here, which I'm gonna label this line with a black level, okay? And that way we know that that's what ICT is aiming for. So between this candlestick's low, this candlestick's high, something in here I wanna attack it.
I'm waiting for them to give me a high, a short-term high around time of day that I want to trade. And then I'm going to wait for it to pierce that high. That's turtle soup. What I just said will make sense in a minute when we drop down lower time frames. But I'm thinking that I want to be short above this high and aim for this level right here. That's a one shot, one kill. That's my focus. I want to be above this price and aim for that one. I'm willing to absorb and ride out all the little fluctuations between where I get in at and where my initial stop loss is to where I'm aiming for. That's down here. Okay. How do we accomplish that? Well, glad you asked. Let's go down to a hourly chart. Remember, this orange line is this candlestick's high, so it has to be an entry for shorting above that level. My entry to get short has to be above this candlestick's high. So that's this price up here. Look at this right here. This candlestick's high, my entry going short has to be above that. As much as this candlestick's low. Watch this price right here. So I have a range of looking for a short in that general proximity. I'm waiting for something to form, technically affording me a short where I can frame a stop loss using the language I'm teaching you so that way you can see it conceptually. All right. I promise you, once you understand everything that I'm teaching, the explanations don't need to be this long and drawn out, but because I have so many new students, I'm getting 60,000 new subscribers every month, which is crazy. So imagine my inbox is constantly the same questions, and I'm reminding you to just stick with the 2024 mentorship because it's going to answer a lot of questions more directly than I've ever done in any previous lectures. But you can always go back in your free time and watch those other ones too because it's good stuff. I use all that stuff still. But I'm doing this in live market conditions over live price action so you can see me explain all this stuff and then you watch it happen in your charts and you're left with no excuse. So we're in this little area. The opportunity is from here to here, okay? So now drop hourly. Isn't it fun? You talk too slow, man. You talk too much and you got to get right to the point. So we have this old high, and inside this range here, what's it reaching for? When it wicked up like this, what is it reaching for? Look over to the left. What is all this? That was me framing the order block up here. And then you have all these wicks, which becomes what? Balanced price range. Why? Why is this balanced? Because we have this candlestick opening, trading up here. We have this candlestick opening and trading up here. We have this candlestick opening and trading up here. So essentially what you're seeing is you're seeing a wall of price action that's been delivered here. It's offered buy side and sell side all throughout this range here. And then it leaves it right there. So that means that I can take that idea and say, I'm going to extend this over here. And once it gets into that area, it should have no easy path into all this stuff or higher. So now I'm further refining this down into a small little pocket of price range. So yes, it can touch this. But before we get to that range, when it's trading above this high here, when it's doing this movement on the hourly, what can I use as an initial framework to say, okay, where's my focus at? It's going up to this level, an extreme level, but it's going to have a real hard time getting above that because we've seen back and forth individual candlesticks overlapping in the same range. Then we have this right there where it leaves that balanced price range and it leaves this tiny little section of price action exposed with inefficiency. What is it inefficient in? It's sell-side delivery, but buy-side inefficient. That means it's got to have, at some time in the future, after this candlestick closes and this one starts, to efficiently offer the market fair value pricing. This gap is what it is, should be repriced to with buy side delivery. That means movement up in price. And we get that here. See how it's starting to flesh out more and more. If this, then that. If this, then that. If not this, then the other thing. Or sit still. So now we have this wall of price action. We're going to take that away because it's going to confuse you. This fair value gap, we're going to drop down into a 15-minute time frame. This is all top-down analysis. So here's that high where the little orange level was anchored to. And this gap, this one here, I'm going to take this one off for a second. This gap here is above this old high, and we're trading up. I want to try to take a short as it's trading higher. As it goes higher, I want to sell short into that because it's going into that inefficiency. I had that big wall of price action. Remember on the hourly chart? It's all those wicks that was saying I'm a balanced price range. It might touch me, but I'm not going anywhere. I'm going to keep price from going any higher. But the wicks can do what? They are allowed to do the damage. That means they can color just outside the lines. So we're seeing that happen here. There's the fair value gap range. It's expanding just a little bit outside of it. But more importantly, my focus is I'm getting above that high right there. Because this is all part of a daily fair value gap institutional order flow entry drill. That means I expect it not to completely close in a bearish fair value gap. I want to see it just go in a little bit like it's doing right here. And I want to see it immediately send price lower. Okay, now we can drop down to a 5-minute chart. Everything starts getting more and more scientific, doesn't it? If I'm watching this time frame, what do I want to see in price? Well, what does my price delivery continuum theory teach you? The higher time frame order flow, any PD array that you're using on a higher time frame, what's higher than a 5-minute chart, a 6-minute chart, a 7-minute chart, an 8-minute chart, anything higher than a 5-minute chart. So what are my usual picks? I use the industry standards because I want to have this little disruption to what you're used to if you come from other schools of thought. So everybody understands the monthly, the daily. Good grief. The monthly, the weekly, the daily, the 4-hour, the 1 hour, the 15-minute, the 5-minute, the 1 minute, and anything less than a 1 minute chart is just bonkers, right? So I say that with tongue in cheek. The previous higher time frame gave us this pink shaded area for the fair value gap to be defined. I laid the rectangle on it based on the higher time frame. And now because it's transposed to this time frame, now we're on a 5-minute chart, what are the bodies telling me? They're respecting it, aren't they? So I'm getting closer and closer to what it is I'm looking for. Because every frame of reference for time, because that's the most paramount thing, no matter who tells you what, baby, time is the most important factor before price does anything. Because if it ain't the right time, price ain't going nowhere, period. The bodies are saying, yeah, we're respecting that. We're not going to color outside the lines, but the wicks will. See, you watch these wicks when it's happening like this and you think, oh, they're changing the algorithm. They're making traps. Tell me if I was trapped yesterday, or was I trapping breakout artists? I was fading at the highest form using what I'm teaching you right here. I'm teaching you the real turtle suit, not Linda Rasch and Larry Connor's turtle suit. Buy the book and you'll see none of this is in there. No disrespect to Linda. I respect her. She was a mentor to me through a book. I've never met her before. I never talked to her except for one time she exchanged a reply to me on Twitter. That was it. I'm not a fan. I'm not going crazy like I was with Larry Williams. I have a high degree of respect for her because she had a huge impact on me in understanding stop hunts. That book helped me understand that. But I don't teach anything from that book. And you should all own that book. And by me telling you to buy the book, guess what that does? It cancels out me hiding anything. Oh, he's secretly teaching smart money concepts that were found in Street Smart's book. Wrong, I'm not. I love the name Turtle Soup. And I just borrowed it for my approach to seeing reversals. Because in my mind, I'm thinking every person is a breakout artist. is thinking the same way that the turtle traders were. Richard Dennis taught them to use a 20-day high breakout. If it went above the highest high in the last 20 days, they bought it. And they used the lowest low. And, well, I'm not going to teach. You buy the book and you'll get the rules. But the point is this. None of that's being taught here. But the idea of a stop hunt and then drawing back into the previous range, it helped me understand it, where I was not seeing that in any other books I was reading. So it helped me understand something on a short-term basis, and it gave me something to use and study price action with. Where mine, no disrespect to those individuals that wrote that book, but I absolutely believe, undeniable evidence that mine is the highest tier of application of the idea of a stop hunt. Like, I don't think anybody else has done any better work on it. And if you think that I'm not being truthful in that, show me that book. Show me that author. I would love to have someone show me something better, not for the sake of competition, because they may know something that I don't know. I think it's highly unlikely, but I don't think it's going to happen. But what I'm teaching you is how to use the top-down approach and use the price delivery continuum theory, which is whatever the higher time frame PD arrays have done at a higher time frame chart, the lower ones should start respecting that PD array as you see here. We allow those wicks to color outside that. It's normal for that to happen. But what I'm watching is what do the bodies do? Are the bodies going beyond the PD array that I'm using to anchor my analysis on a higher time frame chart? In this case, we've seen what? No, it doesn't do that. No, it's not doing that at all. When you're looking at a gap, okay, I'll give you something else was just supposed to be in the book. When you're looking at a fair value gap, how far can it go outside of the range that defines that fair value gap and still be good? How wide is the fair value gap? Because the wick can do that range outside of it. That's one standard deviation on the fair value gap. That is not changing anything for me. If it starts going above it a little bit like that, you've seen me annotate trades. It's a mohawk. That's what I type it as. It's a mohawk. It's just a little tiny little stray hair. Somewhat like when you're cutting the grass, and you're not paying attention because you're watching the next door neighbor because she's in the bathing suit and you're going to get in trouble if your wife catches you. You leave that little line. You like that stuff, don't you? The little line of grass that you didn't really mow over perfectly, and you look back and you're like, oh, I got to go back over there and fix it because you were distracted. You weren't doing what you're supposed to do, which is follow the process of overlapping a little bit. Make sure you're not leaving any stray hairs, or in this case, little stray areas of grass. Well, that's what the algorithm's doing. It's just coloring outside the lines a little bit, but the standard deviation of whatever that PD array or inefficiency is, the fair value gaps, when you're looking at them like this, they're being refined smaller and smaller and smaller. They're not going to go 5 times this, okay? And then so it's a good trade. It's going to be within the realm of whatever this fair value gap width is. It can color outside the line that much. Generally, it won't do that much at all, but that's the rules for it, okay? Now, you're not going to find that in anything else. And today, September 6th of 2024 on YouTube, Michael J. Huddleston has given you more context around fair value gaps. Everybody's going to have it in their mentorship now. Everybody's going to have it in their courses, and they're all going to have it real quick in a chapter in fair value gaps for their Amazon book. But you're still not getting everything. You're going to see that that's just small little pieces of it. This technical science, baby, okay? We're not talking about checkers. So watch what happens when we use the same logic going down into the 1 minute chart. Can you tell I like doing this? Can you tell I enjoy it? I like it a little too much, my wife said. Yeah, you're just obsessive. Well, you got to be. I mean, because this stuff is boring otherwise, right? If you're not really dialed in and excited about what it is you're learning, how could you possibly be expected to do very, very well with it? You're going to get quickly bored with it, won't you? Of course you will. So now, look what we have here. Right away, students of mine that have been with me for a long time know that this is a market maker sell model. Where's your consolidation? Right here. Why are you picking that, ICT? Why aren't you using this down here? Because this is all impulsive price action. It's real sharp. We don't want that. Our eye goes for the original what? What's the rules for a market maker sell model and buy model? The original consolidation. That means your eye is looking for a perfect little box of price action. Well, can you see that this to this, those are relatively equal lows, right? Go straight up from there. What do you have? That's your original consolidation. Inside the original consolidation, go back to the original rules. This is old stuff. It can drop down slightly below that low right there, which is what you get. And then once it leaves it, it can touch what? The original consolidation high. Oh, that's support resistance. Save it, pal. Expansion up. Reaccumulation. I'm sorry, first stage accumulation, reaccumulation, or second stage reaccumulation. Then it rallies up and creates what? Smart money reversal. How does smart money know to sell short at the highs like that? That was the question I had. In the 90s, I sat and looked at charts like this, and I think, man, I wish I could trade the Swiss franc and get that kind of move. Man, I wish I could trade the Deutschmark, which they don't trade anymore. I wish I could get in there and trade that. And I went in and I started breaking things down, and I met some people, and little things happened, okay? And some visitors come and see me. So I learned some things, let's put it that way. And what I learned is what you think about what the markets are doing are not at all doing that. So by having what is really going on versus how I can communicate that in a price chart, that's what you're seeing here. You don't need the smart money reversal. And that's exactly what I taught when I was teaching my market maker buy and sell models, which is absolutely not Wyckoff. It is not. Now, the idea, the infancy of Wyckoff, if you study just the beginning parts of that stuff, don't get caught up in all the other garbage, but the overall markup aspect and then the selling off of it, that is a market truism. It has nothing to do with Wyckoff. It has nothing to do with ICT. That's just the way markets do. They go up and they go down. They rally up and they sell off. Like anything else, when the market is hot for homes, it goes up. All the prices keep going up, 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 up. Who sets the price for your house when you try to sell it? Well, if you have a good realtor, they'll say, this is what the comps are in your area. And what do? Well, I want to be the highest comp. That's what I did. And I got $15,000 more than I asked for. And then another house just sold last, was it March? For more than my money, or for more, I'm sorry, for the amount of money, more than I sold. And my house had more stuff. My house was the biggest one in development. It had more things done to it inside. And they sold it for almost $100,000 more than mine. But I just wanted to unload it. And you set the price for your home when you're trying to sell it. Who owns the market? That's a question that's going to keep you up at night. Who owns the market? You're never going to meet them. You are never going to meet that entity. You all think it's a combination of everybody comes together and we're buying and selling, and that's the market. Bull crap. That is not it. They're just creating a watering hole. And when everybody comes to the watering hole to get a drink, that's when people eat. When they're predators and they want to take down something for food because they need meat. In this world, in the financial market, money is meat. That's how you sustain yourself. You eat the best. So if you can entice the richest people in the world and the biggest conglomerates in the world that want to speculate as well, you create a watering hole for them to do that. And then you eat. That's what the market's for. Anybody tells you anything else, it's not. They don't know what they're talking about. So when price is trading up into this area, what time is this time of day? What is it? It's after the opening range of 9:30 to 10 o'clock. So we now have the market trading inside of our fair value gap. But now that's the first time it can trade there. So anyone that wants to go short, just because it rallies up higher like that, you got to wait. Just give it a chance. Give it a chance to let people go after it, because it's the second mouse that gets the cheese. See, this is the cheese right here. It's baited. That's the area that everybody would want to get if they understood what I'm teaching. They want to get that price level. It's real high. It's nice. But they don't understand the market maker sell model, which is consolidation, maybe a stop hunt initially, rallies, touch the original consolidation, rally higher, accumulate. Second stage, reaccumulation. Then it rallies and takes out a higher high right there. It's coloring outside. We saw it on the hourly. We saw it on the 15-minute time. We saw it on the 5-minute chart. There was wicks up here, right? That's what these bodies are on a 1-minute chart. That is completely permissible. We're not going to look at the bodies of a 1-minute time frame when the higher time frame, hourly, 15-minute, and 5-minute, are showing just the wicks. The 1-minute chart's going to have bodies there. Just like when you're looking at a 1-minute chart, if you look at the wick on this candlestick here, go down to a 15-second or 5-second chart, you're going to see bodies on that time frame. It's completely reasonable to expect that. But watch, when price takes out this high here, and we're inside this area as well, I want to be selling short. I want to get short in there. I want to add more if it can afford me outside the coloring of that shaded area. That's premium pricing. Like, that's really good. That's like you selling your house for $100,000 more than what you were originally aiming to do. Who's gonna be mad about that? Nobody is. And so since I'm aiming for something in this area here and targeting all the way down to that black line right there, in my mind, I'm thinking this is the beginning, this is the inception of the trade, and this is my terminus down here. I don't care what this is all going to require of me, because I'm not going to chase my stop loss throughout all that range. I'm going to wait for logical price points, and then once I place my stop, I'm going to sit still. That's one shot, one kill, because I'm taking down my mark. My mark is this level down here. That's the low of that fair value gap on the daily chart. So now when we have this smart money reversal, you don't need that. Wait for it to break in market structure. That's what you get with this little high here. I'm sorry, this low. We get it right there. And then we trade back up into what? The order block. Where's the change in state of delivery on that? That opening price on that candlestick right there. I better plug my laptop in. I went past the battery life here. Give me a second. This is some boring stuff, ain't it? This guy talks too much. Get out of here if that's how you think. You ain't my student. I don't care to read your comments. That's broom you. So if this is in fact correct, any little retracements up should not take out this high. And our premium array that's inside this as well, like this order block, that price is what you see me annotating in the recording. I'll tell you what, if I don't see 25,000 likes on this video or this live stream, I promise you I will take 2 weeks off of live streaming and I won't come back until then. Because this is stuff that I absolutely never, ever, ever wanted to teach. And it's just a little thank you from all of you. 25,000, or you won't see me live stream until it gets there. And if it doesn't get there, I won't live stream. It'll all be pre-recorded stuff. Oh, you're a jerk. It's free, bro. So anyway, the opening price here, extend that forward. Every time we worked inside that, see that? What is it doing? It's building up positions inside the lower half of this candlestick, but there's no algorithm, right? How do we use PD arrays? If it's a premium array, we want to see the lower half of it utilized and the upper half, ideally, not touched. That's that point here. I'm referencing that. Go watch the video. Go watch it at 0.25 speed. You'll see me annotating saying it's working the lower half of the discount portion and it's under the mean threshold. Mean threshold is a reference point to a range like an order block, or it's kind of like equilibrium, but when we're talking about a specific candle, it's mean threshold. In other words, it's threshold for any type of retracements in and still being valid should be, if you're bearish, up close candles at the halfway point and lower. That's where all of your institutional buying and selling is going to be weighed on. In this case, we have up close candle. That's a bearish order block that's validated on this candlestick right here. As soon as we pass below that opening price there, and let me slow down here because I know what's happening right now. You are brand new and you're probably hearing this stuff and you're like, what in the hell is this guy talking about? I'm not your entry level educator. My assumptions are that you've gone through a lot of the Market Maker Primer course that's on my YouTube channel. If you go through that, that'll give you a little bit of foundation. But starting here is good. Doing all the old stuff and saying, I'm going to go and watch your 2024, you're really missing the opportunity of seeing it stuff live. Because you're going to regret not being here when it happened. And you're like, oh, I watched him call it. It did it. So when we're bearish, we have that bearish order block validated here. So that means from that opening price, anything above that is a potential entry. But ideally, it should never go above the halfway point, which is mean threshold. See how it's doing that? It's staying away from that. That was signaling to me. That's why you see me adding more in there. I'm literally confident, like I could run through a brick wall. I know what I'm looking for, and I know exactly what I have in hand. And I'm like, okay, I'm done. I do one more pyramided entry, and then I just let it ride. And I want to see it attack all these pools of liquidity. And I facetiously troll in the comments as it's happening because they'll say this is selling pressure, and it's not. The market is pausing in here, and it's all time distortion. Time distortion is where the market's being held in a holding pattern, and it's being used to allow entities that you are not going to see doing what I'm doing. What I'm teaching, they're never going to teach that stuff. I had to create a language to get as close as I could to teach what's really going on here. And you can toss that out. You can say, okay, that story is not real. There's no algorithm, none of that stuff. Okay, do that. If that's what helps you, but if you can see it conceptually with my language, that's all I'm really trying to do. I just want you to be able to see how these things relate to what price is going to do. And it doesn't relate to any other form of trading. That's what I'm kind of getting at. Because I get pissed off when people try to discount my entire life's work and what the Lord laid in my hands, because I would not know this if it wasn't for him. Period. Okay? Trust me when I tell you, that is it. And there is no teacher except for him. He's the mentor. So that's the real ghost of the machine. So if we have this candlestick, the halfway point below it, between its opening price and halfway, all of this is potential areas where you could take a short entry. And your stop loss can be used with this order block, or you can use this high here, depending upon what your risk model and your account size affords. Okay, so we'll take this off now. And that validates the order block right there. We'll take that off. Just trying to keep it clean. And now what I'm going to do is I'm going to add the executions. And suddenly, everything changes because you can clearly see this ain't no market replay around here, bro. Can't do that with market replay. Okay. Oh, there's buttons missing. I'm going to put them back on here because it'll come out. See, he didn't have the buttons up there. It was market replay. You can't see those up here in market replay. And so if you're seeing the executions there, they were live executions. Look at the price right there. I know I'm getting real premium pricing here because I'm outside of that fair value gap. Above this high, this is turtle soup. This is where smart money does the smart money short. Market maker sell model. Smart money short. Low risk sell order block. The high end of that fair value gap, that's what I'm aiming for. And I'm targeting right in here in this wick. I was trying to time it as it was inside the halfway point of that and that top of that fair value gap. That's what I was aiming for. But it slipped away from me because it's on a lower time frame 1 minute chart. That's what I was doing there. And then over here, you can see we're adding right there on the wick here. And then I'm aiming for this low to be taken out And I said the market will aggressively reprice down there because the algorithm is not going to want them to pull their orders. Anyone that's long that has a trailed stop loss here, what kind of sell stop? I'm sorry, I just told you, didn't I? What kind of liquidity would be resting below here? Sell stops, because they're long and they're protecting their longs by putting a stop loss below an old low, because the books tell them that's where they should put their stop loss. I love the fact that the books tell them that. I love that these 20-year-old mentors and these old hats that tell you that's how you should trade, this is where you put your stop loss at. Please continuously keep doing that. As long as we keep seeing this regurgitated archaic logic and things that people should be doing in a in an industry where 90% of the people that use that stuff lose, okay, keep doing that stuff. And then you'll never need to lose any sleep about this stuff ever not working in the future. So this low here, you see me annotate that, and then you see, whoops, put that back up here. You see me annotate. Good grief, Michael. I'm charting drunk. You're under the influence of goofballs. There we are. Now you're starting to look like yourself here, buddy. So below here is sell side, and below here is sell side, and then we have the original consolidation here. So that would be, you aim for a run below here. Okay. So there's where your pools of liquidity are and how the market will draw to them, respectively. So you see it drop down. That's wonderful. And then this is your first stage distribution of the sell model. Watch my core content in the 2017 playlist. I actually teach this stuff here in that mentorship. It's all for free on our YouTube channel. You don't need to pay for any of that stuff. Stop buying my stuff from other people, okay? Because you're literally paying for something I put on my YouTube channel for free. So this is the first stage distribution, and then this is second stage distribution. Second stage distribution is your unicorn. It is so quick. It's so powerful. It's the one that you're looking for in every trade that you're looking for, moving higher or lower. If you can identify my market maker sell model or buy model, if you trade the second stage redistribution, that means you're selling short. Or if you're buying the second stage reaccumulation, that means you're going long. You are going to get the biggest, the fastest, the beautiful, easy hold trade that you're looking for. Everybody knows these relative equal lows are there, but not everybody sees the framework that causes this to be second stage distribution. What's this? It's a discount wick. But what happens if you're below it? It becomes what? A premium wick. Boom. How hard can it go above that? Well, you have a little bit of inefficiency here, but then you're met with what? Balanced range. This wick, previous wick, all this is balanced. So it's trading up into it, but it's saying, I'm not going to let you go any higher. You're going to stop right there. Turn it around, bro. And then rolls over. Where's it aiming for? Original consolidation. What's below these relative equal lows? Sell side. Okay, wonderful. But what happens if you just have a little bit more expected for lower prices like I did? Like I was telling you earlier in the week that we were going to look for this fair value gap on the daily chart that's defined by this blue line here and that black line that I made darker because I wanted you to see that was my target. You hold this one, but you can't trail your stop loss up to this high. You can't do that. So if you watch the recording, you'll see me outline the ranges of what I'm willing to absorb. And I gave you all this stuff up in here too. And I gave you the lower half. I said, I want to see price stay below that half. Go watch the video because I'm going to make this video much, much longer than it needs to be by doing something that's already been shown in the video. Because I'm actually typing out, you can see it and read it. So the market, in fact, does drop down and starts consolidating. And that low, I told you in the playback, that is the consequent encroachment of this gap between this level here and here. And I'll show you. I'll just use this opening price and then I'll drag it down. Boom, look at the bodies respecting that. See that? That's algorithmic. And that's what I was telling you. If I want to just hold it for the daily range, okay, I get people all the time. They'll find a video clip or they'll see something I said on Twitter a long time ago or recently, or maybe I'll ranted in something. When I brag about what I can do, I'm I'm not lying about that. Okay, when I tell people I can sell the highs and buy the lows, and I can get the daily highs and the daily lows, I don't know how else to prove it to you, but by me actually doing it. Like I'm doing it, and I'm explaining the logic how you can do it too. It's not like I'm saying here's a trick that I can do and worship me. That's not what I'm doing. I'm teaching you as my students how you can find these things yourself, because it's fascinating to me when I get feedback in the comment sections, and I don't read my emails anymore because there's too many of them. But usually in the comment section is people are like, this is wild. Like, this is really wild to see this precision. It just keeps happening. Right. Isn't that awesome? It's awesome. And because I don't have much in the way of other people in the industry that I talk to, except for students, I love the feedback because I live vicariously through all of you all over again, because you're experiencing what I experienced. And after 30 years, you're not impressed with it to the degree that I feel all over again, because I see that splash over of excitement, because you're finding it in your own charts. You're seeing it, and you test it out, and you're like, this did exactly right, exactly. And it's laughable when they say the market's not algorithmic or controlled by a price delivery mechanism that is absolutely predetermined. It's scripted. That's the part you don't understand. That's why it's laughable that says it's buying and selling pressure, because from here, it's going to drop down to that low. And how many contracts need to be sold short to do that? Not as many as you might think. It just needs one. Every time the new price has been offered, just like you can't sell your house. You're trying to sell your house up here at this price. Nobody's buying. Nobody's even coming to see it. No viewings. All right, let's drop it down $10,000. Nobody's still doing a viewing. All right, let's drop it down to $25,000 less. Nobody's coming to see it. Oh, well, let's keep dropping it lower. And then all of a sudden, what happens? You start getting people that want to buy it. They're coming to view it, right? But they're not buying it technically. You just want to see it. So that's what you're seeing. People buying it. Then that means you can book at lower price and sell. There's always people coming in the marketplace that want to buy and sell at the market, and they only need that one contract transaction. You are not seeing the effects of price moving higher and lower to these levels because it's buying and selling pressure. Because if that's what it is, how on earth is everything balancing perfectly to my PD arrays to the very levels that random buying and selling pressure, that everybody has all these different methodologies? Everybody's doing something different, folks. But why is it listening to what I'm telling you it's going to do? There's only one constant here, what I'm teaching you, because what I'm teaching you is the market. It is the actual market. It is the source code. As close as I can take you to it, this is it. This is visually what it is. This is Visual Basic if you want to be a computer programmer. You won't get that unless you're a programmer. So anyway, sell side here, it aims for that. And then small little consolidation in here. What's it doing? It's affording traders to do what? The people that know that's going to trade for this level here and below here, it allows them to go short. But it's denying what? Harmonic traders, ratio traders, imbalance traders, support turn resistance traders can't get on board. Lower again. Attacking that sell side. Why? Because they don't want the individuals that are long to pull their orders and get out of their long position, because that means their stop disappears. So the algorithm is re-delivering to that price level. It's coded to do this. This is script. It's a macro. It's a short list of orders and directives for the price engine to say, okay, I'm going to quickly reprice lower. Quickly. I'm going to keep offering price lower, lower, lower. It doesn't matter how many people are buying it. It doesn't matter how many contracts are being traded to go long. It doesn't matter. That does not matter, folks. And I know I could be out here every single day for the rest of my life, and there's still going to be people out here arguing. And to me, that's fascinating to me. The level of denial is unbelievable. Find somebody that can do it like this. Explain it to you beforehand using buying and selling pressure, because you're not going to find that. You can't find anybody with market profile and VWAP. They're not going to explain every fluctuation like this, and they're sure as hell ain't going to get position entries like this. They're not going to do it. Not consistently. I'm doing it. I'm doing it. So at some point, you're at this junction where you place your faith in the fact that there's consistency, there's logic being shown, and it's transferable knowledge. You don't have to subscribe to the algorithm. You don't have to subscribe to the men in black. You don't have to believe any of that stuff. Okay, you don't have to believe any of that. But what is price telling you? Because that's really what matters. The time of day and the open, high, low, and close. If you understand that and the basis of inefficiency and liquidity, you don't need anything else. You don't need anything else. You don't need any kind of overlaid indicators, none of that stuff. You'll be able to see everything as it really is. All right, so that completes that day here. And I mentioned, like I said, I could have very easily just closed the trade right here because it's hitting consequent encroachment. And it would have been just a little bit above it for my limit order to trade there. If all I wanted to do was get the low of yesterday. Look where I'm at, folks. Look where I'm trading at. Like, it's real hard to do that with a market order while watching price action. I didn't limit in, I was marketing in it. Watch the recordings. I'm proving to you, because I could have done limit orders and did better entries. But I had to do these hot buttons over here because I'm constantly proving that it's not market replay. Because I love shitting on all these people that come in my comment section. And I'm sure on social media, other places, they're probably talking all kinds of smack. But I just killed them today. I literally just killed them. Made $100,000 in 4 days, bro. Poppy ICT. Yeah, well, that's good. Everybody likes to take the long way around. But this is the low of the day. I could very easily sold short here and bought that, and that's the high and low of the day. What discipline out there is going to teach you that? Nothing else. Absolutely nothing else. So I'm going to ride this out and all this consolidation here. I wanted to, admittedly, I wanted to add in pyramid here. But I wanted to prove that my stop loss statement was like grandmaster level. Like, there is nobody out there going to have the logic that I'm able to teach you and use. Like, I'm using it. I'm not just form fitting it to things. I'm literally teaching the logic and then implementing it. That's what mentoring is. Mentoring is being able to find the concept that is easily transferable, provide the logic. It may be hard to see and understand in the beginning, but then see examples of this supposed teacher or mentor utilizing it in a manner that is undeniable. And when I talk about things in the higher time frame charts, I tell you, this is where the market's likely to go, and I wanted to see it trade down to that fair value gap on the daily chart. And then it happens today. There are moments of astonishment that you need as a student, whether you're learning from me or anybody else, because if you're not getting a steady diet of that wow factor, you're probably listening to someone that's a fraud. You're probably learning something that isn't going to work for you. You're probably not going to be successful at whatever you're wasting your time with. But when you see it being utilized and you have all these other people around the world that are using the same stuff and they're getting profits with it, and they're attributing it to what you're learning right now. And they're learning right now too. They're excited. They got notes going in their journals just as fast as you are. Heads swirling around, new questions being answered, all kinds of things opening up with new logic and new models they're never imagined before. And this is still nothing. This is nothing. This is nothing. Anyway, and then we had the previous new day opening gaps in here. I told you about that. And look what they did here. Look at this. This is what I really got excited about last night. You watch it on the recording where they wicked up in the last hour yesterday. Look at this. Right at the last portion of the daily range. Boom. Why would they want to do that? Why on earth would the market want to do that? Trailed stop losses here. Inefficiency, balanced price range, bang. That unseats trailed stop losses. They won't get the VIP treatment that ICT got. They won't be able to see the promised land. They can get to the Jordan River, but they cannot cross. They get buried on the mountain. This, hanging around what? This is the high of that daily fair value gap. And what is it doing? It's just marking time. And then drips down and then gives you what? The buyers an opportunity to do what? Place what? Stops. What kind of stops? Sell stops. So this is engineering liquidity. It didn't go down to where I said it was going to go yet. It's building liquidity. They want to build liquidity around that level. What does the market do? Rallies up. Consolidates. It's hanging around the upper quadrant of that daily fair value gap using old new day opening gaps, building fake bull flags. Oh, it's going to go higher. No, it ain't. Bang. And then watch. When we're getting close to this low here, the algorithm knows it needs to do it quick. Or you'll do what if you're long? You're going to pull your order and you're going to collapse your trade. They have to have the liquidity there. So the market does this quick drive down. Boom. And there's my exit rate at the low of the fair value gap on the daily chart. Tell me. Talk to me, okay? Talk to me. You tell me who's proving that. Who's proving it? Who's bringing the evidence that can stand up in court? Because I could do this in front of any court, in front of anybody. I can do it on CNBC if they'll let me. You want to see me trade live? I'll do it right in front of Kramer. I'll go on Kramer and say, watch this. Can you imagine? I'd be out there, oh man, Kramer, you don't want me on there. You don't want me on there because I'd be like, look, this guy is the alpha fading indicator. Like whatever he says, give it a little bit of time and it's going to go the other direction. And I don't mean that to be mean, but that's just the facts. Like it's crazy. It's crazy. But I would have literally given my left leg when I was 20 years old. If somebody like myself right here is proving this stuff conceptually, executing with it. Okay, now here's the challenge for the soy boys in the comment section. And it may sound to you like I got like hundreds of them or even 20 of them. I don't. I have usually one or two. And you think, oh, you spend too much time here. I love them. That's what makes this fun for me. Like I have to have some kind of antagonistic argument. One guy out there took it to an extreme to try to make a brand out of it. Okay, and I think it hurt him. But just the back and forth, the banter, the shop talk, I love that. Like I love that, and it's fun to be able to do it with other people, and they don't take it personal. But for the soy boys in my comment section that I love ribbing, and I know some of them probably still love me, and it's like they know who I'm talking to when I say it, Lucas. But the idea of using multiple screens, okay? Here's your challenge. You might have multiple computers, okay, and screens or whatever, okay? TradingView is welcome to come out and verify that what this was done was only with one account. You can't have multiple accounts on TradingView. You have the account. That's it. As far as I'm aware of, okay, unless it's something that I don't know. But I want all of the folks that hold the opinion that this was done with multiple computers, multiple screens. Here's what your challenge is, okay? You have to frame the trade with all the annotations like I have, every key level, and you have to be able to use the logic that I've taught. And you got to get at the high of the day. And then you got to get out at the low over here. Use that logic. I promise you, no one's going to come forward with doing that. They'll do it in market replay, but they will not do it with live price action. They won't do it in a demo. They won't be able to do it with their live account. They won't be able to do it, period. End of story. It's done. So I have a lot of fun with those types of things. And honestly, you should be thankful that these people do this because it inspires me to do these lectures like this. It doesn't inspire me when I got people constantly telling, I love you, ICT. When I go to other people's chat rooms, oh, I love you, ICT. Oh, man, I'm out of there. As soon as I see that, I'm done. I'm gone. I'm not like that. I don't want that. I like the guys that want to give me a ribbing. Like, bro, like show this and show that. You can't do that. As soon as they give me something I can't do, I do it. It's simple. It's almost like a magic show. Okay. Can you show me a card trick? Sure, I'll show you a card trick. I could show you card tricks all day long. I had live stream card tricks for hours and hours and hours and never run out of them. I like that. I love that engagement. I love that, that playfulness, like, yeah, but it ain't so-and-so. And then, okay, boom. And it's just like, oh, shit. They never come back with a response after that, which is my perfect response. They're like, nothing. They can't say nothing. So when I talk about this stuff, some of you try to defend me and mother me or father me by saying you spend too much time. You should be thankful that they do this because that's the dichotomy here. That's the thing that gets my juices going. Like it makes me want to do more of this. That's like you have no idea. That's when I'm driving around. I want somebody to give me road rage. I want them to get out of their car. Please get out of your car. Please get out of your car. Because I'm looking for that. I'm looking for an outlet. I'm looking for that. Think about what I was telling you about the 2008. I was looking for something. I wanted stimulation. I was already wealthy. I was already aware of, where I was in the world. I'm happy. But now what do I want to do? I need to do something dangerous. And men are just typically, they're the creatures that do it. Women don't generally do that stuff. So in this education platform, I like when people say, I don't believe you, and they want to say something. If they took the time to send me something in the comment section, that means that I have them emotionally hooked. And that means they have committed, they placed the bet. That's what they've done. They've taken the time to type that out. And then I'm going to honor their time by answering their bullshit and answer it in a way where it leaves them speechless. And if they have a hero, or if they're the hero in a sock puppet account that's offended because I'm doing something they are never going to be able to live up to, dude, you don't have to say that you learned from me. But if this helps you become a better trader, and if you want to sell services and signals and stuff, at least you know how to do it for real now. That's all. That's all I'm trying to do. I'm having fun doing something. I don't mean anything mean-spirited to anybody. I don't wish any ill on anybody else. I don't have that mentality. Like, I don't have that. But I do like to have fun, and I can take a good ribbing. When people have something that's said about me funny, they make skits about me or whatever, I laugh my ass off about some of that stuff. It's funny stuff. I'm not hurt. I'm not ashamed and hiding my face. I'm out here live streaming. And do you see anything slowing down? No. Because I'm comfortable in my skin. I'm comfortable with who I am and what I'm able to do. And as a mentor, you want to have that mentality, because you're going to have students that are going to challenge you. If you don't do this, then you're a fraud. If you don't do this, I don't believe you. You didn't do this because you didn't do it this way. You're always going to have these new challenges, and you get to pick and choose what you want to answer. You have to have the comfort knowing that people are going to come at you. Like, I'm the hottest thing right now in trading. Just go out there and look at it. It's just like that. It doesn't mean that I'm right for everybody. It doesn't mean I'm the perfect mentor. But I have to have fun doing this, or I'm not going to do it. And this is my way of being fun. Like, I have fun with it. And I don't get my feelings hurt when people doubt me, or if they say something that may be viewed, that other people that are supporting me, they want to go to war about that. I don't think like that. I think it's fun. Like, it's fun. When other YouTubers and live streamers, they talk smack about me, they say something funny, I laugh about that. Unless it's something personal about my family or something like that, I have a sense of humor. And some of you out there feel like you have to be my bodyguard. You don't have to be my bodyguard. Like, I'm not insecure. Most of you have insecurities that are really unhealthy for a student. And that's what gives what we have here as a community a very strong cult-like persona. And to kind of like take away the sting of that persona, I just grabbed it and said, okay, yeah, we're the cult of winning. Because nobody else's community is going to be like we are. We're dialed in on precision. We're looking for consistency. We have levels of precision that it's alien to anyone else. It's literally ridiculous to be able to say, oh, this is ICT trades like this guy or that guy, or ICT trades like me. There ain't nobody that trades like me. I like for you to show me who they are if they exist. But here's the 9 o'clock run up. All this spending time above that daily fair value gap, above all this buy side here, and then they ripped it lower. And this is that lower wick that I highlighted on the daily chart. Let's go back out to actually I want to take a look at this. I didn't see ES. I haven't looked at it. I want to see ES real quick. Yeah, it made a higher high there. Look at this. This is ugly, isn't it? This is when I talk about certain things, and I'll use adjectives that may seem a little weird. This delivery in ES, because I get a lot of questions, why are you in NASDAQ and not ES? Because NASDAQ is a little bit more wild, and because it's more wild, it has a lot more likelihood that inefficiencies will be formed in it that won't be sometimes as clear in the E-mini S&P. So look at the difference between how this price action is here. This is like fuzzy, okay? It's like back and forth. Yeah, there's inefficiencies in here. You can see them, okay? But NASDAQ is a whole lot cleaner. And you can use the NASDAQ and still trade ES. Like you can look at the inefficiencies in NASDAQ when we're moving lower and say, okay, well, what is ES doing? And if ES is starting to retrace higher at the same time that the NASDAQ's trading up into a fair value gap and it's respecting its lower half of its inefficiency, you're not going to have mark to market perfect, the candles stop at the same time on ES, it'll stop on NASDAQ. If you're holding it to that degree of precision, it's going to frustrate you. But you can read price action in NASDAQ and get a good feel for what S&P is going to do. But if you look at what we have in NASDAQ, look at this area here. See how price is delivering all this in here? Contrast that with what you have in the NASDAQ. See how easy, and your eye jumps right to the inefficiencies? Here, here, and here. That is a stark contrast to what the delivery mechanism was in ES. So it's a little bit more fuzzy, a little bit more, it's like a muddying of the waters. It's still going to go where we think it's going to go, but it's not going to be as pristine and clear like you can see clearly with the NASDAQ. The inefficiencies go right into it and then breaks aggressively. So anyway, I think that's it for today. I had fun today. I'm really hungry. I enjoyed murdering the hearts and minds of everybody that likes to troll me. I made $100,000 in 4 days, bro. Copy ICT. Well, I did it in less than 1 day. One trade, one entry, full pool, one stop loss movement, and that was it. And I could have done way more than that. Like I could have built this up wildly, doing everything I've done in the past by pyramiding and keeping it going. My question to you is, do you see value in this? In the final moments here together today, live, I want you to think about it. Think about the chances of you having someone that's doing what I'm doing for you right now. I'm doing all this for free. I'm doing this with my own personal time. I always overstay unless my wife says, I asked to absolutely end and we got to do something. I'm always over delivering because I enjoy it. My passion is teaching this because I know what it's done for me. I know what it'll do for you if you're earnestly trying to learn how to do this. The markets are absolutely not random. They're not random. They're not hiding things from you. If you're learning from me, they're never going to be able to hide it from you. Everything is in that chart, but they've done a clever game of constantly pumping out misinformation with indicators and other schools of thought. And the problem is, with good, reasonable money management, it's easy to trick yourself into thinking that that's what makes the market go up and down. Your harmonic patterns, your ratio this, your animal patterns, your Wyckoff, your moving average crossovers, your supply and demand zones. Come on. Everybody has something, right? What works in this industry all the time is sound money management. That wins every time. You can make money flipping a quarter. Heads you buy, tails you sell. Use a reasonable stop loss. Don't overtrade. At the end of the year, you can be profitable. Does that mean that you should sell your course on how to flip the quarter the right way? No. But that's the gimmick and that's the fraud that's in this industry because they know that you're chomping at the bit to learn how to make money. And you all think that this is easy, fast money. The only way that occurs is if you're selling an education. I can make millions instantly overnight. All I got to do is put a price tag on this. And you should feel comforted that that's not going to happen. There's no hook here. There's no upsell. There's no nothing. I'm delivering more than anybody ever has and ever will. I'm not going to teach everything that makes me who I am, but what I'm teaching is going to take years for people to catch up to that. Everything I've at this moment taught and made public, it's going to take years for people to get good and proficient with it. And when I start seeing that, I'll come out and teach some more stuff. I won't run out of anything. Okay, I have lots of toys and techniques and tactics. And they're all better than what you've seen so far. Like this is nothing. This is like elementary school stuff. It's very, very, very simplistic things. There's the lowest order of technical science that I have. And it has to be taught this way because the more higher tier stuff, it requires a whole lot more things that I honestly don't have at my age right now, the patience or energy to teach it. Like I don't, it would take a great deal of effort. And to answer the ones that are asking, is my book's going to have all that stuff? No. It will have new PD arrays. It'll have new things that amplify what has already been taught here. So that way you have a full panoramic view. But you don't need to buy my books, okay? And I know the people that are partnering with me, they don't like me saying that. And I don't care because I'm not trying to sell books for money. I'm only writing the book to have an ISBN number and a copyright that says, this was my work. This was my work in print for the first time. Other people will be able to talk about how these things existed. And the ones that have class and character, they have given me credit in their books, which is fine. Even though they taught it wrong, it's fine. But it's helped stimulate this whole frenzy around me and my concepts, smart money concepts, ICT this, ICT that. And because it garners attention, you have people that want to make videos about me. You want to do exposés or expose the fact that I just did what I just did here today. Expose that. You ain't going to touch that subject matter. You ain't going to touch that. You're going to take something out of context. You're going to make up lies. You're going to listen to somebody else's bullshit. And then you're going to try to get viewership on your channel or clicks on your Twitter account because you need money. And that's fine. I'm doing that. I'm doing you a better service. I'm teaching you how to actually learn how to make it in the market on your own steam. And I don't even care if you ever tell me thank you for it. I don't care. That's not what I'm here for. I'm here because I want to lay it down for my son. That way he can see it. He can see these setups in enough time working with it. Come on. Your funded account challenges. They offer you and they afford you what? 15 contracts. I didn't even use 15 contracts. And I didn't break a rule that would have been utilized against you if you were using a particular funded account company. You can't add to a losing position. My position is I'm not pyramiding into a losing trade. Study that. Trust me. Those guys, as much as they would love to be able to copy what I'm doing, they don't want you all learning how to do this because you're going to break them. And that's not my motivation. Earlier when I was having fun about that, don't be sending me some hate mail. Okay? I don't want to hear about it. You got your own little thing. I'm providing you a whole list of new clientele that's going to come in here. And if they listen to me, they'll make money. But the ones that are keyed up like I am, they may take it as a challenge to go take you to the poorhouse. I mean, it only takes one good trader. Think about it. One good trader that has an Ocean's 11 itch. Or you ever seen that movie 21 with Kevin Spacey? And he taught everybody how to count cards. And they went to the casino and they were beating them. It only takes one person to be able to be really, really good at this. And they get their little Ocean's 11 or they get their little click up. And they say, we're going to take down these funded account companies. So you need to stop screwing your clientele. Because if you keep doing that kind of stuff, there's more of us than there are of you. And you're making lots of money. Lots and lots of money. But the doors are open for people like me and who I'm teaching. And they can come in and crush you. Crush you. Because they can make a point to say, look, we're going to army up. And there's going to be a large number of people that are going to follow this same account. You're done for. And it's not like it's going to affect the market because you're not even in a real market. You're in demo. So they're not going to seek and hunt stops. Because if there was a large body of traders coming in like that type of liquidity, they're going to move on that. But because you're all demo, it's an easy way to smash all of you. And that's the number one reason why I would never go out there in that setting, because word travels fast. If I say anything in my private mentorship, it's already on Instagram. It's already in all the other stuff because there's leakers there. They want to be the person that's leaking something exclusive. And that's why I don't do most things anymore at that group. I converse with them. We talk about things. But I'm doing more on a YouTube channel publicly now because of that very reason. So if I went into a setting like I'm going to trade with Top Step, or I don't even know all the other companies anymore, but that's the one I know of because two of my sons went through their thing. But and that's not an endorsement for Topstep, by the way, but if I was to open up an account with them and start trading with it, you think they're going to keep that quiet? Hell no. Hell no. Seeing what I'm doing, Michael Patak would absolutely be copying every fucking thing I'm doing. And there ain't no shame in the game. I would do it too. If I was him, I'd be like, man, whatever this guy's doing, I want to copy that. And what happens when the other people behind the scenes in the back room that work those companies, they know I'm in there, and they just say, well, I can just put a little trade copier here. Come on, I would do it. I would do that. I'm not going to lie about it. I would absolutely do that. If this guy was making it available so I could see what he's doing every single time, you all know you'd be doing it too. Come on. But what happens when individuals out there that learn how to trade really well, maybe not with this stuff, maybe they do trade with other stuff and they're profitable and they're wildly profitable, and they have a bunch of people with them with the extended goal over time to knock you guys out of business. Think about that. So you have to really handle yourself differently. And when people earn their money, don't screw them. Don't screw them out of that stuff. Oh, well, you broke this rule. You didn't do that. Now it's supposedly one company saying you got to record yourself trading. Well, my students, if they know how to trade, they probably would love doing that. They probably want to see if they're trading what I'm showing in my charts. If you're trading like that ICT guy, we got to get this guy out of here. Deny all payouts. It's some funny stuff. I mean, it's not funny for the people that should have been paid out because they've earned the money, but it's crazy. I'm sure they're probably thinking, man, this guy's teaching everybody how to do this stuff. Yep. Boys in Chicago are paying attention to it. Trust me on that. Tell me I can't, and I'll make more of me. So that's going to be it for today. I'm going to grab something to eat, enjoy the weekend, and relax. I hope you all had some fun today. I hope you learned something. I certainly had a great time with you all. I hope you watched the video I shared yesterday. It's sped up. If you watch it at 0.25 speed, you don't want to hear me sound like I'm drunk. I've never been drunk in my life, but at 0.25, I'm going to sound like I'm drunk. But watch everything I'm annotating in the chart, and then compare and contrast what I showed you here, how we worked from higher time frame using the PD arrays and the price delivery continuum theory, where everything on the higher time frame has to be confirmed with that lower time frame. Contrast that with what you hear in retail. The higher time frames have to confirm the lower time frame. No, because everything is algorithmic. Prices are going to be reacting to, in the way I'm teaching you, with the lower time frames, because it's high frequency in nature. Algorithmic trading is not slow snail's pace trading on weekly, monthly, and daily charts in 4 hour. That's not what that is. Not that there isn't algorithms keying off of those time frames. There are, but algorithmic delivery of price, that the engine itself is causing the fluctuations higher and lower, where the price is going to go, whether there's buyers or sellers at any degree of significance, more or other than any other day. These things are predetermined. And I'm telling you, I know some people just don't like to hear it, but if it was anything but what I'm telling you, I would tell you. But if it isn't what I'm telling you, and I'm able to do this, what other school of thought am I employing? What is it? Because you're not going to find that. It's not going to happen, folks. It's not going to happen. But you're welcome. You're welcome to go out there and waste your time doing it. Some people have tried, and they became students. And I wish you all the best with it. I want you to do well. I certainly want my son to come out here and do a better job of being ICT 2.0 or 5.0 now than I was. I want him to do it correctly, not have the self-centered, all about me that I had when I was 20. I wish I had this mentality when I was 20. I would have been a huge name in the industry way before I am right now. And I'm not really that big of a deal, so don't think I'm trying to make myself bigger than I am. But when it comes to trading, everybody knows what SMC is. Everybody knows what an ICT is, and they're polarized. Either, yeah, I know him, he's a crackpot, or yeah, wow, that guy's something else. It's crazy. And that's what it is. And I like being polarizing, because that means I'm constantly going to have a fresh perspective put against me. And then over time, those individuals that listen to that bullshit, they'll come here and they'll see what I'm able to do and what my students are learning, and they're doing in their own hands. And there ain't no better testimony than you finding what you're looking for and never understanding what it was that you were seeking until you see it for the first time. And you're like, wow, you're telling me that I can get short at the high of the day? And all I'm trying to get is 10 handles? And what happens if I just hold it? Right. What happens if you hold it for the entire daily range? What happens if you carry it over to the following day and you reach for targets that I'm teaching you the algorithm's going to reprice to anyway? You just got to submit to the time holding on to them. Everything changes, folks, and you won't be able to sleep. You'll have so much energy and excitement. It's not fear. You'll have so much excitement. Like you will be buzzing. You won't be able to stand it waiting to get through work because you want to go home and get into the charts and dig through it and study more. That's how you know you're progressing. If it's hard for you to get into the charts, if you're finding it daunting and you're listening to me and it's like, oh, this guy, I don't even want to go through this anymore. Just stop. Save yourself all the trouble and just stop, because you're not equipped, ready, and wanting to do it right now. You may want to do it later on. But if you have to force yourself to do this and learn from me, then that's the surest sign that you're not ready. That's all. That's all it means. And go do something else. Try to learn something from somebody else. There's a lot of other YouTubers out there that are live streaming and actually doing their trades in front of you. Go learn from them. Go try to do what they're doing and see what it does for you. It might work for you. It might fix it for you. But if it doesn't, come back with that perspective. And I promise you, you will find what you're looking for, because you're going to see something totally different than everybody else's stuff. Even my YouTube channel students, like Tanja, well, that's the only one I want to promote right now, because there's other ones that are coming up, and I don't want to put a spotlight on them because they're just not quite ready for all the fanfare. Because I put my finger on Tanya's live stream. She has a lot of trolls in there now, and I know they're trolling me because they know I'm watching, and that's fine. They're broke. But the point is I'm not trying to create a drama fest for any of my students, and they're welcome to create that on their own. But even they that are profitable, they're not trading like I trade. You didn't see any one of my students do what I just did yesterday into today. And for the folks that are telling me you took the same trade, show me. Telling me in words. I know what you think. You think by saying, yeah, I took the same trade. And same entry and exit ICT. I want to see that. I want to see that. I had 4 people tell me that in the comment section. And they're not subscribed. They're just somebody that just watched the video and they just left a comment. I'm telling you that you're lying. And you're lying and you're doing the same thing that people do, as I mentioned here in other lectures, where if you do something, a demo account, and it's not even linked to anything and it pans out and you want to show everybody your MT4, your MT5, or your demo account result on TradingView or whatever it is that you're trading with, you want that response from the social media to make you feel good, because what you just did should have already been enough. Like if you know what you're doing and the trade goes just like you want it to do, whether you're tape reading it with no demo account or a demo, or you're trading with real money or a prop firm, the fact that you're following your rules and it's delivering as you expect, that should get you ecstatic that you're progressing, that you're going through the motions, that you're properly learning. You're not going through this rut. You're not stagnant. And the purest sign that you're not equipped and you're not following the rules of going through the process of learning here or anywhere else is if you go on social media and you toss your hat out there and say, give me a tip, give me some money, give me an attention, some engagement, dopamine hit. Let me feel good for a moment, because you can't find the comfort in the progress that you're making studying in the privacy of your own home, your own office, wherever it is you're doing it. Nobody needed to tell me I was doing it right when it started happening. Nobody needed to tell me, attaboy. I loved the fact that I had all the ammunition to go against my family and friends that were talking about me when I was coming up and saying you're wasting your time. They all finished working their life and retired, or some of them are still working in retirement, because they don't know how to make money. They weren't successful. But these are the same people that said, you ain't going to be able to do anything with that. And now my name's everywhere. I have people in other countries saying, we talk about you here, blah, blah, you're what? It's weird. It's weird, right? But I know it can work for you. I know it will. I absolutely know it will work for you. But the problem is you have to believe it will. And how you learn to believe it, go through the process I'm laying in front of you, just like I'm doing with Caleb. You start like just screenshotting, finding things in hindsight. And the more you do it, you start getting better at seeing it. And then you start applying new concepts as I reveal them in education, showing you examples of it. I'm not just talking about stuff that's after the fact. I'm doing it. I'm telling you what I think is going to happen in the week, and then I'm executing on them. Don't believe me? Go back and listen to every lecture and everything I outlined on Caleb's channel too. They were all before the fact. It's never hindsight. It's never after the fact. I'm just not going to put you in a trade that's going to make $100,000 so you can go online and pretend that you're smart and scam people and say, I'm going to teach you better than ICT, because that's the new flavor right now. Okay, you can teach better than me. You can trade better than me. Do something better than I just did. Outline the week, what it's going to do, where it's going to trade to, and then you make $100,000 in one single trade, single pull. You do that. Show the executions, record the entire thing from beginning to end. Prove it's not a demo. Prove it's not this. Prove it's not that. Go all out, everything possible. And then you'll get a nod from me. I'll even point people to your channel if you want to be a live streamer about it. But I promise you, you will not be able to do that. In years from now, you will. My best students, they'll be able to pull that same trade off I just did. Absolutely. I'm confident that. I have taught enough. I just went through the process of doing it here. See, the problem is you're trying to do everything and you're not focusing on one concept. Where's the price going? And then you're just looking for anything to get involved in that. If you're bearish, you want to get in as high as you can. So what's the highest premium array? You got to go through their time frames to find it. But you're rushing. You want to be in these 1 minute or sub 1 minute charts, and you want to make big, big money on small, little, tiny fluctuations because you think, I don't want to be in the trade long enough. I want to get in and get out. But there's going to have to be a period of time where you hold on to the trade, because you're not going to grow if you just go in there for taking 5 handles in ES and 10 to 15 handles in NASDAQ and be done. You will stagnate as a trader. And what that does is it's rewarding you doing not enough. You have to broaden your range of opportunity by holding on to trades longer. My comfortable time frame, okay, is working inside the weekly range. I don't want to hold anything over the weekend ever again. I just know that I don't have like I'm 52 now. I think about things a little bit differently. My body responds to things differently now as an older man. And while I'm not a senior citizen, I do feel physical changes in my body. And I don't want to put things on me that is unnecessary. So I'm completely content with doing the types of things I'm doing here because I'm not absorbing or incurring or inviting over the weekend risk, which is, in the climate we have around the world right now, astronomical. Like anything can pop off. Nuclear war, terrorism, biochemical, all that stuff. I mean, anything can pop off. And that will cause crazy town levels of volatility in the marketplace. And if it's not on the right side of my trade that I'm holding over the weekend, when we open up on Sunday, I could be in some serious financial distress. And I just don't want to incur that. So my appetite is working inside the weekly range. I know I have the market's going to trade except for 1 hour. It's broken between 5 p.m. and 6 p.m. every evening. And I think if you have been paying attention, much like the comment section has proven to me, that it's 99.999% just a love fest in there, which is the reason why I don't like showing it. Because it looks like I'm encouraging worship, and I don't want you worshiping me. I don't want you. I see every one of your comments, even the ones say, I don't know if you probably see this comment, but I see all of them. I'm not going to reply to you, but many times it's a statement that you make or something like that. It'll inspire me to talk about something in the recording, as some of you probably already realized today. But I just want to give a shout out to the ladies in the community, because that part of our community is growing a lot. And to me, I find that very comforting because this is a man's world in everybody else's eyes. But I've said this before, and one dude had to be the guy. Oh, you're simping, dude. You're broke, and you gotta get your head out of your ass. We have to work harder at being better as a trader, as a man. Women don't have to do the things to compensate for size, performance. We're all like that as men. That's how we think. That's the economy between men. Who's stronger, who's bigger, who's longer, who's harder, who stays up longest, all that stuff, and who has more money, who has the prettier wife, who has the best chin line, who has the prettier teeth. All these compare and contrast and competition. And in trading, women don't have that. Like, I watched a podcast, and it's not a podcast I'm a fan of, by the way, but because it was all women, I literally was like interested. I said, I want to see what they do, and watch how women engage with one another. And they're all traders. They did not one time unzip their pants and let it fall on the table and say, "Let's see who measures up." They conversed with one another. They didn't vilify one another. They didn't look like they were offended by the other person's perspective. They all felt like, wow, yeah, it's a sisterhood. And I think that the men in this industry should look at one another like a brother and encourage the next guy. It doesn't mean that you can't rib somebody when they need it or when you want to have fun with it, and they shouldn't have their feelings hurt and be like, oh, well, I'm going home, take my toys home. But men generally are the source of the toxicity in our industry, not just in online social media around trading, but even in the industry outside of social media. Like, I'm going to Traders Expo next year. Like, I'm going to be down there. I'm going to be floating through there. I'll probably go grow my beard out and dye my hair and probably get some fake tattoos all on myself, going incognito. But I want to see what it's like walking around all of you. A wolf among sheep. I want to see the bravado, and I hopefully will see some of the ladies that are in the industry, and I want to be able to capture that so I can tell you this was what I observed. But the men are the toxic side of this industry. The women aren't, and it's not surprising that my students that are doing the best, that make the most real money, not prop money, real money. Real money. $30,000 a week, real money. Hello. They're female. They're born with a vagina. What are they doing differently? It's how they think. They don't engage social media. They don't even have a social media presence except for being in contact with me. And that's not the secret sauce. It's the fact that they cut out all the bullshit. All the drama, it's out. They don't want drama in their household. They certainly don't want it in their finances, and they don't want it in their thinking about trades, because you have to guard your mind. And young men and older men, you need to start applying that stuff. That's not simping. That's common sense. And the data doesn't argue against it. It's supplying the proof that women are better traders. Doesn't mean that you can't find some reckless guy out there. I'm going to throw out everything and just go all in, full tilt. It's either going to work or it's not. And if it doesn't work, I don't care. But what if it does? I'm going to be a legend. No, you're not. You're a gambler. Proficiency and precision is what I just demonstrated. That to me is impressive. Making lots of money on one trade after having severe drawdown in the same day, that's not impressive. That's gambling. Having big windfall wins. Take out your top 2 or 3 windfalls. How are you making money now? So many people online are making a career over the one big thing they just did, or the one big payout they just did. There's a big buzz right now. One prop firm just did supposedly, I don't know if it's true or not. I don't know. But supposedly there's a big multi-million or almost $2 million payout. And to whoever that student is, or I shouldn't say student because I don't know who it is. Okay, I'm not trying to say it is. I don't know who it is. I heard somebody else talk about it. It was Trades by Matt. And I thought to myself, wow, if they're putting out payouts like that, that's why I was like, okay, well, let me just test the waters and see what's going on. Because if you're telling me that I could somehow, then look, man, that's easy. Like that's easy. You're basically asking me to do a demo account and make millions of dollars. Yeah, I can do that. That's easy stuff. Of course I can. I can do that. I can create proxies and hey, look, here's what we're gonna do. You want to see record payouts? It's closing time. We had to pay everything. ICT's a partner now. Oh shit. Oh, anyways, it's boring now. We got to get off here. I'm talking about things that aren't even that funny anymore. So it's funny to me though. Wish you a very good weekend. Be safe. Study. Go back through that recording yesterday or today from yesterday's trade into today. Slow speed. Take screenshots of that and then build that same thing that I'm being demonstrating in my charts. Map that out on yours, and then log anything else you see in your own observations. Okay, and then I think next week I owe you a London session, so we'll probably do one Tuesday. This is scheduled now. Tuesday morning, which will be my local time, 1:45 a.m. Okay, so it's technically Tuesday's trading. For some of you in other parts of the world may look at things differently, but my time, 1:45 a.m. Tuesday. Okay, we'll meet on live stream on YouTube on this channel, and then we'll talk about things over the London session. Okay, so Monday will be a regular, I guess 9:30 or so, a couple minutes right before 9:30. I'll try to keep it to like 10:30 because I want to make sure I can get everything else I do in my personal life, and then have time to get everything set up for later that night for me. But it'll be 1:45 a.m. Eastern time next Tuesday, and we'll do a live stream until whenever I get tired of being on there. Okay, so until I talk to you then, Lord willing, be safe.